Hello people, welcome back after that wonderful support break. So now we'll be taking up the FMRTP, Financial Management ka RTP May 2025 review we shall be doing. Overall, some good questions has been added, some 4-5 good questions has been added in this RTP. So I would rate this as a pretty good, better RTP comparatively from ICA this time. Okay, so let's see and review what we can learn from this particular RTP questions. So first question is a case question based on investment decision. So Linty, small space company, blah, 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 and all we don't need. We'll go into the matter. They want to purchase a new automatic machinery and they have two alternatives. Either they can buy machinery 1 or machinery 2. Two options are there. Okay. And both ka life is 10 years. Fine. They've given some data. First machinery will cost 45 lakh. Second will cost 50 lakh. If you go for first machinery, you will save wages of 15 lakh. Second one will save wages of 20 lakh. That means this is what, sir? Inflow, right? Similarly, estimated savings in scrap we have to the extent of 5 lakh and 6 lakh. Again, this is an inflow. They've given you various data. Let's first categorize them as an inflow or an outflow. Because for investment decision, we need profit or we need cash flow. Cash flows are categorized into inflows and outflows. Now, estimated additional cost. Cost means inflow or outflow. Outflow for machinery 1 and 2 they have given. Great. Next, estimated additional cost of indirect labor. Again, this is an outflow. Then estimated cost of repairs. Again, outflow. But one cost they did not give, which is a depreciation. That one hidden information we need to do it. So few inflows and few outflows they have given as a case. What is the requirement? Depreciation is done under straight line method over the useful life. That means what will be depreciation? First asset ka cost is 45 lakh and the life is 10 years. So that means the depreciation for first, there's no value. So how much is that now? How much is that first? Okay. We'll do it. Or maybe we'll review that little later, leave or else. Straight line method ka useful life, you need to charge depreciation. Company ka tax bracket is 35%. Return expected is 15%. What is the ask? They are asking you, they've given a case and multiple MCQ questions has been asked. What is the annual savings from machinery 1? Savings from machinery 1, indirectly they're asking you it is the PAT. Profit after tax. That's what they mean by annual savings. Annual savings of PAT of basically machinery 1 and machinery 2 is what they're asking. Okay, that's what we need to figure it out. Can we do it quickly? Okay. First one is, excuse me, or I think this we will quickly review. So how do you get profit after tax? Basically, inflows minus outflows you need to do. You will get profit before tax. From that, you reduce tax, you will get profit after tax. So take a calculator. First inflow is what, sir? We'll do it one I'll do, machinery 2 you can manage. There's nothing, there's actually a repetitive question. So savings is how much, sir, here? For 15 lakh. Here again a benefit of 15 lakh. 15 plus 15 you do. How much is that? 20 lakh. 20 lakh minus 2 lakh. Then minus 1.5 lakh. Minus 4 lakh. You do that. How much are you getting? 12 lakh, 50,000. So far we have got it till here. That's what we got it here. This is the data given to us in the question. Now the depreciation you need to take. What is the cost of the first asset? Cost of the first asset was 45 lakh. Life of the first asset is how much? 10 years. So 45 lakh divided by 10 you do. How much is that? 4 lakh 50,000. So that is a depreciation, reduce it. Okay. From profit, from this one, if you reduce depreciation, you will get profit before tax how much? 8 lakh. Tax rate is 35%. Reduce that. You will get profit after tax how much? 5 lakh 20,000. Okay, Saru. Now for investment decision, we need profits or we need cash flow? Cash flow. After PAT, we'll do 6 adjustments. What are those 6 adjustments? Add back depreciation, add back salvage value, and then opportunity cost, working capital, additional investment, and short-term capital gain or loss if it is there. All that information is not there here. Only one thing is there, which is what? Depreciation. You'll get what? Annual cash inflows. Okay. First answer to first MCQ question is they asked what is the annual savings. So that is what, sir? What is the answer? Basically 5 lakh 20,000. What is the, in fact here? What is that? Annual savings means PAT. What is the PAT for first option? 5 lakh 20,000. That's all is what they're asking. Easy. Okay, everybody. Fair enough. All right. Okay. And don't here 1 minute. Once again, maybe one more I'll tell off here. Okay. Don't reduce this. Okay. This is not scrap. This is what, sir? This is not your salvage value. Some people take 45 lakh as a cost of the asset, reduce a salvage value 5 lakh. This is what? This is what savings in scrap per annum. Scrap means when you use old machinery, you will generate some waste. You will generate some waste. That when you buy a new machinery, is that waste will come or waste will get saved? That they are asking. This is not asset ka salvage value. This is not asset ka salvage value, because this is on a per annum basis. Salvage value you will get every year. No. In fact, salvage value is given in this problem or not given? Not given. That's what they're trying to say here. Okay, people. That is the answer. For machinery 1, I have done. Same format you can do it for machinery 2. So I will focus more towards the new questions here. Okay. Repetitive, quickly we will review. Okay. That's the answer to the first MCQ question. Okay. Next, they've asked a payback period. Payback period, all you need our help. How do you get payback period? Initial investment divided by annual net cash flow. In this problem, one good thing is net annual cash flow is changing every year or same every year? Same every year. How much is that cash flow we got? Cash flow we got it after adding back depreciation, we got 9 lakh, 70,000. This is your denominator. How much is your initial investment for first machinery? 45 lakh. 45 lakh divided by 9 lakh 70,000 you do. Payback period is how much? 4.63. Okay, sir. Very straightforward. Next, they've asked ARR. Sir, how do you get ARR? Quickly tell you in formula. You will take PAT. In fact, PAT or you will take average PAT. Average PAT. But anyway, here profit after tax any which way is same every year. That means that profit every year itself becomes what? That only becomes your average PAT. In fact, formula you can write average PAT divided by what, sir? Either you can take initial investment or average investment. Check the MCQ option. They would have solved either using initial investment or they would have solved using average. I think in this problem, they have solved using average investment. First, you try using initial investment. If you don't see any option, then solve using average investment. You will find it. Both will not be given. That will be controversial. Okay. So if at all they give, you will give extra marks. Grace marks will be given in that case. Okay. So do you know average PAT? Yes. What is that PAT, sir? Profit after tax is 5 lakh, 20,000. So that means what is your average investment? How do you get average investment? Half of initial investment minus salvage value plus working capital. Here salvage value not there, working capital not there. That means initial investment only you will have to divide by 2. What is the initial investment for machinery 1? 45 lakh. 45 lakh divided by 2 you do. How much you going to get? 22.5 lakh. ARR is a return. So multiply by 100. So how much you going to get? You will get 23.11%. This and all is a question, sir. For your standards, all these are what? Nothing. Yes or no? Okay. Next question they have asked is profitability index. How do you get profitability index? Present value of cash inflow divided by present value of cash out. Here cash inflow is changing every year or same every year? If it is same every year and useful life is 10 years. If it is same every year, will you use PVIF or PVAF? PVAF. What is the annual net cash flow for machinery 1? Just now we got 9 lakh 70,000. Discount factor they have given at 15%. So 15% ka we'll use PVIF or PVAF? PVAF. This way you will get present value of cash inflow. How much is that? 48,68,430. That is the present value of cash inflow divided by present value of cash outflow. For machinery 1, the outflow is 45 lakh. You will get profitability index of 1.08. That's all. Done, people. So quickly reviewing. This is a repetitive question. Nothing much. In fact, this is literally homework only. There's nothing new in this. Yes, sir. So this is the case-based question that they have asked for the first one. Can I move forward to the next? Okay, second question. This is also repetitive since it's an MCQ question. Quickly, I'm doing it. That's all. Okay, shares of ACB company. It's presently traded at 51. So that the current market price of this is how much, sir? 51. That is your P1 or P1 or P0? P0. The company is expected to pay dividend. Dividend already paid, we call it as D0. This is expected to pay means this is D1. Okay, D1 is how much? 5. Growth rate they have given it to be 10%. Okay. It plans, the company wants to raise new equity shares. They need some money maybe. Okay. The merchant banker has suggested that the underpricing of 2 rupees is necessary. That means are you planning to issue new shares at higher value or lower value? Underpricing means you are issuing it at lower than market price. What is the current market price? 51. Are you planning to issue it at 51 or 2 rupees lesser? That means issue price is how much? 49 rupees. Okay, sir. All right. And besides this, it involves a cost of 50 paisa per share as miscellaneous expenditure. To issue this shares, we have to incur 50 paisa rupees as cost. This only we call it as a flotation cost. How much is flotation cost? 0.5. Okay. Issue price is 49. Flotation cost is 0.5 means what is your net proceeds? 48.5. Correct? No. The moment it is growth rate, we will use Gordon's formula because Gordon's only rate where we use is the growth rate. What are they asking you? They're asking you cost of new shares. Cost of new equity shares. That means they are asking you cost of equity. That too using Gordon's growth model. Tell me what is the formula for cost of equity? Either you'll use D0 or you'll use D1 depending on information. What have they given here? D1. So the formula will be D1 divided up by P0 minus flotation cost, whole thing added by growth rate. D1 is given to be 5 minus P0. P0 could be issue price. If it's a existing debt, first priority you will give it to market price. If it's a new instrument, your first priority you will give it to the issue price. So P0 here becomes your issue price. What is the issue price? 49. 49 minus flotation cost you do. So that means our net proceeds will become 48.5. Whole thing added by the growth rate. What is the growth rate, sir? 10%. Do that, you will get 20.31%. So D for Delhi is the right option here. Any problem in this question? Pretty straightforward this also. Yes, sir. Okay, move on to the next question. Leverages. Online also till now, there are no people, no issues. Can I carry on? I hope I can maintain this pace if it's a repetitive one. Correct? No, nothing new. Yeah. For the new ones, we will go a little slow and try to learn them. So one company is there. Their operating leverage is 3. Sales level is 7 lakh. Operating income. Operating income means what, sir? EBIT. Okay, their EBIT is 2,20,000. Okay, now they are saying sales has fallen. Fallen sales is how much? 10%. Sales is reduced by 10%. They are asking you what will be fall in sales of company by 10% will result in decrease of operating income. Operating income is EBIT. Sir, they are asking you how much EBIT will fall. How much EBIT will fall. Now, simple. Which leverages measures the relationship between sales and EBIT? Sales and EBIT is measured by operating leverage. Okay. Now, they have already given operating leverage is 3. Sir, if operating leverage is 3 means for 1% change in sales, there will be 3% change in EBIT. Correct? That's what operating leverage measures. Here there is 1% change in sales or 10%? 10%. That too 10% ka increase or 10% ka decrease? Decrease. If sales is reduced by 10% means operating income will reduce by thrice of that, which will be how much? 30%. So 10 ka 30% you do. How much is that? I mean, rather 10 ka 3 becomes 30%. So operating income will fall by 30%. Currently, what is operating income? 2,20,000. Operating income will reduce by 30%, which will reduce how much, sir? 66,000. They did not ask you new operating income. They asked how much operating income ka impact. What will be the impact in operating income? It will reduce by 66,000. So that's the option you need to select. So if they ask you new EBIT, what will be the new EBIT? It was a 2,20,000. It will reduce by 66,000 and it will become how much? 1,54,000. If they ask you new EBIT, then you will select 154 as the option. They asked what will be the impact, what will be the decrease in operating income. Operating income will decrease by 66,000. Hence, that is the right option you need to select. Fine now, people? Straightforward leverage wala question. Done. Okay, next question is on ratio analysis. Good question. I'll keep this as an LDR. Last day revision. Okay, I've given you in the regular class a lot of LDR questions. You can add this question also to your LDR list. Okay, now let's see what we can learn from this question. From the following information below, prepare the balance sheet. You need to prepare the balance sheet. So ratio analysis, usually from ratio, they'll ask you balance sheet. For leverage, they will ask you income statement. That is examiner's favorite way of testing these sort of questions. Okay, stock turnover ratio. Sir, keep telling me the formula so that it becomes a recap for us. How do you get stock turnover ratio? COGS divided by either you will take average stock. If average is missing, then you will take closing stock. If you quickly review the data, have they given you 2 years data or only 1 year? Both are amounts. Both are amounts. That means they've given only 1 year data. If they've given 1 year data, can you take average stock or probably closing stock? Probably closing stock. Fine. Then cash balance, they are saying 10% of current assets. Whatever is your current assets, 10% of that is your cash balance. But this current asset should be net of prepaid expense. That means prepaid expense should be considered or it should be netted off. Netted off means you should first reduce. From the current assets, you should reduce prepaid expense. Of that, 10% will constitute cash and bank balance. That's what they're trying to say. Okay, G. Alright, GP ratio is 20%. 20% of what? Sales. Sir, if GP is 20% of sales means COGS will be 80% of sales given. Okay, fine. Creditors turnover ratio. Normally, how do you calculate creditors turnover ratio? Annual credit purchases are divided by average accounts payable or closing balance of accounts payable. But here they told creditors turnover ratio is based on COGS. That means the formula will be credit purchases or COGS. COGS divided by creditors. You can take it. Or you can take accounts payable. Fine now. Alright. Next, debtors turnover ratio is 12. How do you calculate debtors turnover ratio? Annual credit sales. Annual credit sales are divided by either average debtors or closing balance of your debtors. One of the information. That's how you get debtors turnover ratio. That is given to be 12. Next information check. Net fixed asset is 25% of total liabilities. Fixed asset is a net fixed asset. That basically the closing balance. Net means what, sir? After reducing depreciation. Before depreciation, it is gross. After depreciation, fixed asset only we call it as net. Okay. After depreciation, fixed asset ka value will be 25% of total liabilities. So we know this. Total liabilities and total assets will be different or same? If fixed asset is 25% of total liability, means indirectly it is also 25% of total assets. Correct? Yes, no? Sir, if fixed asset is 25% of total assets, means current asset will be 75% of total assets. Okay, probably we may have to take this help and solve the question. So whenever it comes, you need to think how and all the linkage is being established. That way, it will help you to solve the questions faster. Depreciation is 15% of the opening balance. Opening WDV ka 15% is your depre for the current year. Fine. Current ratio is 1.6:1. That's as good as saying current ratio is 1.6. Capital gearing ratio. So how do you get capital gearing ratio? Gearing ratio means what? Using fixed cost instrument to increase equity ka return. So what are the fixed cost instrument? Preference share capital plus debt divided by equity you can call, or you can also call it as net worth. Okay, that is given as 0.6:1 means it's indirectly nothing but 0.6. We'll see where you can use this information. This is what they have given. All the purchase and sales are on credit basis. Even if they don't give, we will make the same assumption. Now balance sheet ka format they only given. Okay, now check. In some components of balance sheet, they've already populated. Share capital is how much? 36 lakh given. Reserves in surplus and 14% bond. We don't have preference share capital. We have only bond. And these bonds carry an interest rate of 14%. Both are missing and total is also missing. This only we call it as, this number only we call it as capital employed. Correct, no? Capital employed means all the source of finance put together. Correct, no, sir? Yes, or no? Yes, okay. Sir, current liabilities, trade payable missing, outstanding expenses also missing. But they told, check, they have given what? What is this? Total current liability is given. Awesome. Why? Sir, they have given you current ratio. They have given you current ratio. How do you get current ratio? Current assets divided by current liability, and current liability ka value given. That means using this you can find out current assets. Using current assets you can find out total assets. Using total assets you can find out fixed assets. And then accordingly you can also find out depreciation. Linkage. Understood? This is the way. You have to find. One false means automatically everything will fall. But you need to identify which component to find out. Okay, everybody? Done. This is done. Next. But 1 second, hang on. This 45 lakh is net of prepaid expenses. Weird adjustment, but anyway, we can't question the question. Sir, prepaid expenses should be shown under current liability. Yeah. Sir, prepaid expense is part of what? Current assets. But what have they done? This 45 lakh is after netting off prepaid expense. Netting off means adjusting. That means is a value of current liability really 45 lakh? No. This 45 lakh is after reducing prepaid expenses of 7.5 lakh. Because prepaid expense is current liability or current asset. One component of current assets, they have reduced it. So ideally, crazy adjustment. Will you show prepaid expense under current liability? Yes, sir. But anyway, can we do anything about it? I say wanted to construct some different question. They brought in of this. What to do? I mean, is current liability really 45 lakh? No. 45 lakh is after reducing prepaid expense of 7.5. That means actually current liability is how much? 52.5. Okay. But yeah, this is what it is. Manageable, everyone. Alright, next, what did they give? Fixed assets ka opening balance and depreciation we need to find out. Closing balance also you need to find out. Current assets also. Current assets has these three components. All are missing. Total is also missing. I think we got. All working notes should form part of your answer. We got the track. What should we hold off? They have given you current liability. Using current liability, we will use current ratio and find current assets. Using current assets, we will find total assets. Using total assets, we will find fixed assets. At least that much we can do. Okay. Don't worry, in ratio questions, no, one or two adjustments will be newly framed. Entirely, like this one. This is literally crazy. Correct? No. Prepaid expenses, who will adjust from current liabilities, sir? This is just for the sake of making the question little weird, these sort of adjustments are done. But absolutely no problem. At least if they've asked 5 things, at least 2 or 3 components, if you are able to find it, do it within time. Instead of 10 marks, if you at least get 5 marks, it is good. From a new question, even if you get 20 to 30% marks, you're still a good chance that you'll score exemption. So don't freak out. But be very, very careful about the time. Don't waste too much time. So when you read the question, if you feel this is totally weird, keep it at the end. First, whatever you know, first you solve. Now, can we start with this? Now, how much is the current liability, sir? I've already solved. Quickly, we'll review it off. How much is the current liability? In fact, current ratio we will start with. What is the current ratio given in the question? 1.6. How do you get current ratio? Current assets divided by current liability is 1.6. Therefore, current liability will be equal to what, sir? In fact, I can substitute only. How much is current liability? Current liability they have given in the question is 45 lakh. Is that the actual number or it is after adjusting prepaid expense? After deducting prepaid expense, current liability is 45 lakh. But what is the actual value of current liability? 52.5. Substitute. Current assets we don't know. Current liability is 52.5 is equal to 1.6. With this, you will get current assets to be 84 lakh. Any doubt in this number, anybody? I'll go slow on these questions. I'll keep asking. Online also, are we comfortable with this? Can I move on? This working note? Quickly go on telling so that I can move forward. Okay, now we know current assets. Now they told fixed asset is 25% of total liability, not me, question told. Sir, if fixed asset is 25% of total liability means it's as good as saying fixed asset is total 25% of total assets. If fixed asset is 25% of total assets means current asset is what? 75% of total assets. Do you know current assets? Yes, current assets now is 84 lakh. Now, current assets, you know, current asset is 75% of total assets. Can't you find out total assets? Yes. How do you find out current asset? How do you find out total assets? Current assets divided by 75%. Current asset is how much? 84 lakh. 84 lakh divided by 75%. If you do, how much you're going to get? 112 lakh. This is your total assets. Easy, people. Once more, or got it? Got it. And fixed asset is how much? 25% of total assets. Total assets is 112 lakh means fixed assets will be 25% of that, which will be how much? 28.5 lakh. Okay, people. Yes. Correct. So total assets will come where? Total assets will come in balance sheet. Balance sheet you prepare at the beginning of the year or end of the year. That means this is the total assets at the end of the year. Using this, if you find fixed asset means you will get fixed asset balance at the beginning or at the year end. That means this 28 lakh is fixed asset ka closing balance, because in this problem they asked you fixed assets ka opening balance also, depreciation also, closing balance also. Yes, sir. Correct. So closing balance of fixed asset is 28 lakh. Clear? They told what in the problem? Depreciation is 15%. No, we read the data somewhere. What is that? Where is that? They told depreciation is how much? 15% of opening WDV. So the number that we got is opening WDV or closing balance. We have got the closing balance. Sir, it's like this. Sir, if the opening balance is 100 means, depreciation will be how much? 100 ka 15%, which is 15. That means closing balance will be how much? 85. This 28 lakh is opening balance or closing balance? I mean, this 28 lakh represents what, sir? Closing balance, which is representing 85%. It represents 85%. We want opening balance, which represents how much percentage? 100%. Pro rate. 28 lakh is for 85 means for 100%. Opening balance will be how much? Multiply 28 into 100 divided by 85. If you do, how much you're going to get? 32 lakh 94,118. So opening balance of fixed asset was 32 lakh 94,118. You have charged a depreciation of 15%. Calculate 15% depreciation. Either you can find depreciation as these two come minus, or you can multiply 50% of this. You will get 4,94,118. That is the depreciation we have calculated. Done, people? So far, any problem? Now, let's update this value. Fixed assets ka value. I'll update only the closing balance. What is the fixed asset ka closing balance? We got it. Here only we'll write. Fixed asset ka closing balance is 28 lakh. This we have got it. Yes, Saru? Any problem? No. Okay. Next, start. What is the next information they've given? Check what has been established. Sir, they linked something. What is that? Cash and bank balance. Cash and bank balance is 10% of current assets. Did they stop there? No. They said cash and bank balance is 10% of current asset, but this current asset should be after netting off prepaid expenses. After netting off prepaid expenses. Stop. What is the current assets? We have got it here. The current assets we have got in our question right now is 84 lakh. Sir, can we take this number and find out cash and bank balance, or we have to net off prepaid expense? We have to net off prepaid expense. Prepaid expense given in the question is 7.5 lakh. First, reduce 7.5 lakh. That's what we mean by netting off. After netting off, after netting off prepaid expense, what is the current asset? 76.5. Any problem? So this is current assets after netting off prepaid expense, which is 76.5. Any doubt? If this is 76.5 means bank balance, they told it is 10% of this particular number, not me. Question has told that. Yes, no. So this is 76.5 means cash and bank balance will be 10% of that, which will be how much? 7,65,000. Okay, G. So in these sort of questions, what you do is have balance sheet ka format. As in when you find the components, go on updating. So it will help you to decode few things. So how much bank balance you got? 7,65,000. Go back to the question ka balance sheet and fill out this value. So inventory we got, or rather cash balance, we got it to be 76,500. Correct now? This we have got it. Any problem? 7,65,000. I don't know. No. Or okay, fine. I'll take a number. Maybe you would have seen better. 7,65,000. Okay, G. Now 1 minute, carefully observe. What is it? One carefully, if you observe current asset, one observation you should be able to get it. What is that? Sir, there is a prepaid expense. There is a prepaid expense. Is prepaid expense showing under current asset? Crazy question. Why? Sir, prepaid expense, they are not showing under current assets. They are reducing it from current liability. Dabba people. I don't know who used their kidney for this question. Prepaid expense should come under current assets. But in the balance sheet, they are saying prepaid expense don't show under current asset. Reduce it from current liability. Can we question the question? No. Okay. That means what is the total current assets? What is the total current assets? Total current assets, how much did we get, sir? We got current assets to be 84 lakh. Can I show 84 lakh in my balance sheet? No. Because in my balance sheet, solution ka balance sheet, can I show prepaid expense under current assets or reduce it from current liability? Reduce it. That means what is current assets? Current assets ka value will not be 84 lakh. We have to reduce 7,50,000. Yes, people. That's how they are asking us to prepare balance sheet. Don't ask me. Question ka requirement. Okay. So after netting off prepaid expense, what is the current assets? 76.5. Okay, Saru. I mean 76.5 lakh or 76,50,000 is the total current asset in this question. Why? Why not 84 lakh? Tell me once again. Why not 84 lakh? Because prepaid expense of 7,50,000 is shown under current assets or reduced from current liability. It's reduced from current liability. Correct or question ka requirement? Question ka requirement. Can't do it anything. Okay. So we got total current assets in our balance sheet. We got cash and bank balance. Only thing we need to find now is inventory and trade receivable. But one good thing here, I can find the total. What is the total? Sir, fixed assets ka closing balance is 28 lakh. Current assets ka total is 76,50,000. What is the total? Quickly tell. These two you add. What are you going to get? 104.5 lakhs. Sir, if total asset is 104.5 means total liability also will also be 1 lakh or 104.5 lakh rupees. Everybody good. Oh, that means awesome. Why? Sir, total liability is 104.5. In that current liability is 45 lakh means capital employed will be balance. What is that balance? Tell me. So this will be what? 104.5 minus 45 lakh. How much is this? Quickly tell, sir. 59 lakh. 50,000. This also I've got. Understood? Or some other number? Correct number? Over? So far, all good? All good? You need a minute to review or so far? Okay. Yes, no? Yeah, this is where you should tell something, Pa. Okay, na? Can I move on? Online also okay, na? Continue, pakka continue, or too much sapad or going off goal like this? No. That is also there, sir. Your explanation is putting more sleep, sir. That's okay, sir. Okay. So I'll start further, sir. Next, I can find out what I will see. So coming back to the question. So I found out almost many components. So now I'll figure it out. So only thing I need is two components on the liability side. That is reserves and surplus and bonds. These two I need to find out. Then probably I need to find out, oh, I think this one is also there. Creditors and outstanding expense. And I also need to find out inventory and trade receivables. And here, no, somebody used their kidney too much only. Too much only they used. Why, sir? Okay. Now check. There is a relationship. What is that relationship? Sir, GP is how much? 20% of sales. Sir, if GP is 20% of sales means COGS is 80% of sales. Okay, now what I say is some mathematically jargon they brought in. What is that is, let sales, you can't find debtors and inventory because no other information. You can't find debtors also, you can't find inventory also because information is not available. But there is a linkage. What linkage is? Let sales be X. You'll have to assume a variable. Let sales be X. That X method. We don't like our X's, but still we have to use our X's in this problem. Okay. So let the sales be X. Correct? Sir, if sales is X means COGS will be how much? 80% of sales. So it will be 0.8 X. How much will be your GP? GP is 20% of sales, which is 0.2 X. Done. Everybody cool? Now let's calculate your debtor. We'll calculate stock turnover ratio. How do you get stock turnover ratio? Tell me once again. COGS divided by closing stock. How much is that? 15. So let's substitute. This one you understood. No, we'll have to do a variable over here. I've solved it. I'm just saying it here. Let the sales be. Once again telling. Let the sales be X. Using this particular approach, I'll be able to find out closing stock as well as debtors. This is the highlight of this particular question. This one. And that netting off of prepaid expenses. I don't know, that according to me is very weird. That should have been not be there. This is okay. This is acceptable. This is a good mathematical adjustment. Agreed. But netting off prepaid expense and from current liability, that though beats me. And I will not question. I will leave it to your best judgment. But let's forgive the mother body and move forward. Okay, sir. So let the sales be how much? X. Sir, if sales is X means GP will be 20% of X, which will be 0.2x. So COGS will be 80% of X, which will be 0.8x. Till here we have got it. Yes, sir. Correct, sir. No. They told stock turnover ratio is how much? Stock turnover ratio, they gave it to be 15. Tell me the formula for stock turnover ratio. COGS divided by, we don't have average information here. So we'll have to use closing stock. COGS divided by closing stock is equal to how much? 15. Now will we write COGS or we will substitute? Instead of COGS, we will write 0.5x divided by closing stock is equal to 15. Therefore, closing stock will be equal to how much, sir? 0.x divided by 15. Sir, we didn't solve. No, wait, we need this. This is okay. This is okay. Closing stock is 0.x divided by 15. Let's find out debtors. For debtors, they gave you debtors turnover ratio. How much was debtors turnover ratio? 12. How do you calculate debtors turnover ratio? Sales, if they told in the problems, total sales and credit sales are same. So you can take the same number. Sales divided by debtors is equal to 12. Yes, instead of sales, I will write what? What am I assuming sales to be? X. So that means I'll substitute. 12 is equal to X divided by debtors. Debtor is equal to how much? X by 12 when you solve. Okay, G. Now okay na? Pakka na? Now go back to the balance sheet. Now go back. 1 minute. Tell me, remember this value. How much is closing stock? 0.x divided by 15. How much is debtor? X by 12. So try to remember. So now we will plug in here. Now, or maybe I'll not plug in. Can you tell me one? You can find out. Now you can find out debtors and closing stock. Can you tell me how? Let's see how you will use your kidney now. You can find out. You can find out closing stock as well as you can find out debtors. How? Sir, inventory plus receivable plus cash and bank balance is equal to 76,50,000. Inventory is something 0.x divided by 12. Something we got. Debtors also we got it. That means if you add these three, the total should be equal to how much? 76,50,000. Now you got an equation. Solve that equation and you will get X. X is sales. From sales you will get COGS. You will get GP. You will get closing stock. You will get debtors. 5 components. Damar. This is a very good adjustment. Someone properly has used. Okay, sir, this will not click. But for these sort of question, if they bring in, no, they will not do too much modification. Ditto question, they will bring it to you in the examination. Like that. But if this question had come in the exam directly, many people I'm sure would have not even attempted this question. 1 or 2 they would have attempted and said, leave. Not worth it. Yeah. But luckily they have given in an RTP, so we know how to approach. Now can we do it? Okay, what is the equation again? Tell me the equation, make me happy. Equation, you tell me. Equation, no, inventory plus receivable plus cash and bank balance is equal to 76 lakh, 50,000. That's what I'm written here. Check. Where is it? Here. Inventory plus debtor plus cash and bank balance is equal to 76 lakh, 50,000. What is inventory? Instead of inventory, we will write 0.x divided by 15. Instead of debtors, we will write x by 12. Cash balance, we already got it to be 7 lakh 65,000. This is equal to 76.5. Now solve the equation. Solving should have to tell, it's okay. This is okay. This equation you will be able to solve, no? Yes, no, people. When you solve, you will get x to be 5 crore 3 lakh 78,050. What is x? Not your x. Here in this problem, what is x? X is your sales. X is nothing but your sales. So in this problem, sales is 5 crore 3 lakh 78,050. Now the moment you know sales, GP, COGS, debtors, closing stock, everything you can find out. How much will be your closing stock? Closing stock is what, sir? Closing stock is 0.x divided by 50. X is 5 crore 3 lakh 78,050 means multiply. Solve these equations. You have to take 0.8 into this number divided by 15. Do that. 5 crore 3 lakh 78,050 into 0.8 divided by 15. If you do, you will get 26 lakh 86,829. That is your value of your closing stock. Similarly, how do you get debtors? Debtor is x by 12. X is how much? 5 crore 3 lakh 78,050. So this number you take and divide by 12. How much are you getting? 41 lakh 98,050. If you want, you can also write down. How much is GP? How much is GP? GP is 20% of GP will become 20% of sales. So how much is sales? 5 crore 3 lakh 78,000. That got 20%. This number ka 20% you do. How much is GP? 1 crore, quickly tell. 1 crore 75 lakh. 1 crore 175. 1 minute. 100,75,610. This is your GP. Can you also find out COGS for me? Yeah, COGS will be what? 80% of sales. So this is your sales. This is your sales. Sales ka 80% you do. This number ka 80%. If you do, how much you gonna get? 40,30,244,0. 4 crore 3 lakh 2,000 or whatever, some number. Correct? That is your COGS. Sir, the moment you know COGS, you can find out creditors. Why? Check the question. They told, what is that? They gave you creditors turnover ratio, but creditors turnover ratio in this problem is based on purchases or it's based on COGS? COGS. So that means the formula for creditor turnover ratio in this problem is what? Instead of credit purchases, you will take in the numerator COGS. COGS divided by creditor is equal to 10. You already know COGS. So find out the creditors using this information. That is the next information. You can find out trade payable. Creditors turnover ratio is 10, but it is based on COGS. So COGS divided by creditors is 10. So trade payable will be COGS by 10. COGS by 10 if you do, you'll automatically get 40 lakh. Basically, this is your COGS. This divided by 10 if you do, you should be getting 40 lakh 30,244. Done, people. Now we have majority of the numbers. Let's go ahead and fill our balance sheet. So how much is the stock we got? Closing stock is how much? 26 lakh 86. 2686. How much is that number? 2686,829 or 289. 2686,829. Okay, this is 2686,289. Okay, then trade receivable was how much? Trade receivable was 4198,170. 4198,170. I mean, this is fully completed. I don't have to worry about that. Yes, no. And I got fixed assets opening balance also, depreciation also. This also is completed. That means asset side of balance sheet pending or fully done? Fully done. Okay. That's the only thing I got, or even creditors also I got. Creditors also we got. Creditors ka value is how much? 40 lakh 30, 40 30 244, right? Creditors is 40 30 244. Awesome. I can figure out outstanding expenses. Balancing figure. Total current liability is 45 lakh. In that, if creditor is 40 lakh 30 244 means your outstanding expense will get it as balancing figure. How much? These two ka minus you do. How much is that? 4 lakh? 4 lakh 69,000. 7? 756. That's what. So I mean, this portion is also fully damar. Yes, sir. Only thing we have to find damar now is receivables and bonds. Now see what information we did not use. Did we take stock turnover ratio we used? Yes. Cash is over, GP is over, creditors is over, debtor is over, fixed asset over, depreciation over, current ratio over. Oh, brrr. Capital gearing ratio. We touched this or we did not even touch? Now let's touch. Capital gearing ratio, how do you get? Preference share capital plus debt divided by net worth. We read the balance sheet. Are you able to see any preference share capital here? Cut. That means capital gearing ratio is how much? What is it here? Debt divided by equity. Equity means equity share capital plus reserves and surplus. That should be equal to how much? 0.6. Equate that. Let's see what we can come out. What we can find out that. Capital gearing ratio is 0.6. In this capital gearing ratio, in this problem, we don't have preference share capital. So directly we'll take in the numerator only debt. Debt divided by equity share capital plus reserves and surplus is 0.6. Debt we don't know. I'll keep it as it is. Equity share capital, I think they gave. Yes, no? Equity share capital was given in the question to be 36 lakh. Reserves and surplus we don't know, but equity share capital we know it to be 36 lakh. So take this 36 lakh, reserves and surplus we don't know, is equal to 0.6. Now when you solve this, what are you going to get? 36 into 0.6 if you do, you will get 21 lakh 60,000. So bond is equal to 21 lakh 60,000 plus 0.6 times of reserves and surplus. Bond is also unknown, reserve and surplus is also unknown. So can we solve this equation or we have to keep it as it is? Keep it as it is. But I have solved this. I'm happy. Problem over. Why? Problem over. If I get this means problem is over. How? Sir, very simple. Sir, do I know capital employed? Yeah. What is my total capital employed? 59.5. How did I get that? Total liability is 104.5. In that, if current liability is 45 means these three put together should be how much? 59.5. Now you know, is bond ka value expressed in reserves and surplus? Yes. Substitute you'll have to do. Basically, these three if you add, what you should get? These three if you add, you should get how much? 49 lakh 50,000. That did you understand? These three if you add, these three components if you add, it should get 59 lakh 50,000. Give me an equation for that. Give me an equation for this. Share capital plus reserves and surplus plus bond will be equal to how much? 59 lakh 50,000. This equation everybody got? Okay, let's substitute now. First, let's write that equation. Where is it here? Equity share capital plus reserves and surplus plus bond should be equal to how much? 59 lakh 50,000. Done. That only we call it as capital employed. You can write capital employed or directly you can write 59 lakh 50,000 if you don't like names. Fine, people? Yes. Sir, equity share capital, you know. They've given in the question. How much? 36 lakh. Reserves and surplus, you don't know. Fair enough. Bond also you don't know. But bond now can be expressed in terms of reserves and surplus. Here only you got it. What is that now? Instead of bond, what will I write? Bond is equal to 21 lakh 60,000 plus 0.6 times of reserves and surplus. So instead of bond, I will substitute with this number. Do you agree with me? Correct. Just a substitution. Once more or okay? People. Yeah. So reserves and surplus, we have it as it is. Instead of bond, we will write 21 lakh 60,000 plus reserves and surplus. If you want, instead of reserves and surplus, you can assume a variable x. If x is your liking means. Okay. Or you keep it as it is. Now solve, sir. Okay. 36 lakh plus, this one you'll have to solve now. You should have to solve or manageable. Manageable or you're not answering. Okay, fine. So do it, sir. 36 lakh plus 21 lakh 60,000 is how much? Quickly take your calculator. 36 lakh plus 21 lakh 60,000 is how much? What is that? 57 lakh 60,000. This 57 lakh 60,000 will go to the other side. So minus that. 59.5 minus that number you do. How much you're going to get? 1 lakh 90,000. That's how directly I've written 190. Okay, Saru. This is reserves and surplus. When we write reserves and surplus, it is always what? One reserve and surplus. Correct? No, it is one reserve surplus. This is 0.6 reserves and surplus. One reserve surplus, 0.6 reserves and surplus. When you add, it will become how much? 1.6 times of reserves and surplus. Now, how do you get reserves and surplus? 1,96,000 or 1,90,000 divided by 1.6, which is 1,18,750. That's how to find out. Okay, G. Now, if you know reserve and surplus, can you find out bond? Yeah, bond is equal to 21,60,000 plus 0.6 times of reserves and surplus. Substitute that. Now, reserves and surplus is 118,750. 0.6 times of that you do and add 21,60,000, you will get the value of bond. Proper question. Okay. Basically, this is given to waste time. That's all it is. At the end of the day, you could say. So, bond ka value is 22,31,250. Bond also you got. Reserve and surplus also you got. Balance sheet pending done. Balance sheet done now. That's all is this question all about. Okay, G. Yes. Pakka, G. One recap. Let's give a G for this question, G. Okay. First adjustment here is they gave you current liability is 45 lakh. This is normal one or after adjusting? After adjusting. That means the actual current liability 45 lakh or 52 lakh 50,000. 52 lakh 50,000. That is one. And they gave you current ratio in the question. How do you get current ratio? Current assets divided by current liability. Sir, the moment you know current liability, you can find out current assets. Okay. And current assets is how many times, how much of total assets? 75%. If you know current assets, you automatically know total assets. Like that. If you know total assets, you can find out fixed asset because fixed asset is how much? 25% of total assets. That's how those particular components are linked. That's what we used. Is it okay? Short summary I'll give you. That's fine now. Okay. Next, they told cash and bank balance is 10% of current assets. Do I know current assets? Yes. How much is the current assets I got? Using your current ratio, I got current assets to be 84 lakh. Can I take this number and find out cash and bank balance? No. What did they say? Current cash and bank balance is 10% of current assets after netting off prepaid expense. That means from this 84 lakh net of prepaid expense, how much you will get? 76 lakh 50,000. 10% of that is your cash and bank balance is what as per the question is. So cash and bank balance also you got. Okay. So now what is that, sir? What is your current assets now? What is your current assets? Current asset is it 84 lakh? No. Because this 84 lakh includes prepaid expense. Can you show prepaid expense under current assets in this problem or under current liability? I mean, as per this particular problem goes, current asset is not 84 lakh. It is 84 lakh minus 7.5 lakh, which is how much? 76 lakh 50,000. So that means in this question, you got the net current asset to be shown in the balance sheet to be 76 lakh 50,000. Okay. So these three, if you add, you should get 76 lakh 50,000. This one we already found. In fact, cash and bank balance we already found. Inventory and receivables was not given. They had given no information. Hence, we assumed the sales to be X. We assumed the sales to be X. They told GP in the problem to be 20%. 20% of sales. Sir, if GP is 20% of sales means COGS will be 80% of sales. Now you will get closing stock in X terminology. You will get debtors in X terminology. So inventory plus debtor plus cash bank balance, if you add together, you will get 76 lakh 50,000. You have an equation. Solve that equation. You will get X. What is X? Sales. The moment you know sales, you know GP, you know COGS, you know closing stock, you know debtors. Yes, this is the linkage. Yes, people. And they also linked COGS with the creditors. They also linked COGS with the creditors. If you know COGS means you can also find out creditors. If you know creditors means the other outstanding expense, you can get it as balancing. I mean, still here, from here onwards, whatever balance sheet component is there, fully we have done. If total liability is 104.5 and if current liability is 45 lakh means these three put together should be how much? 59 lakh 50,000. So these three if you add means you should get 59.5. Now there is a linkage between these two. How is the linkage established? These two ka capital gearing ratio. Okay, in this, how do you get capital gearing ratio? Preference share capital plus debt divided by equity. In this problem, preference share capital not there. That means the formula is only debt divided by equity share capital plus reserves and surplus is equal to how much? Is equal to 0.6. Now you will be able to express bond in terms of reserves and surplus. If you don't want to take reserves and surplus, you can assume reserves and surplus to be A, B, X, and like that also you can solve. That way you will get an equation. These three put together, you should be 59 lakh 50,000. Solve that equation, you will get reserves and surplus and bond. That's how this question has been thought and put across. Okay, so like this all question will come, sir. Sir, one or two new questions, tricky questions will always come in every paper, not just FM. Okay, you should go and anticipate them. It is all right. Okay, fine. But there will be some straightforward question also. Solve that first. Based on this, for this question comes for 10 marks means even if you get 3 or 4 marks from this question, happy. Now you should get full 10 marks because we have solved. If such question had directly come in examination, even if you get 2 to 3 marks, you should be happy. It is okay because it is not just you. 99.99% of the people would have not solved this if it comes directly in the paper. Because so much of kidney, to frame the question only, they must have thought so much. Now you will have so much time to think all this. But now if it comes, means full marks is good, please. Yeah. Okay, this is done. Can I go for the next one? Now question number 5 is same as question number 35 in our class notes. I'll not be doing that. Only new questions will be taking. This is done now. Question number 6 is a capital structure question. I'll keep this question also as an LDR. Last day revision question. Little bit of good kidney usage in this problem also. This RTP is good according to me. Okay. All right. In fact, no sir, I will feel happy if you help me in this question. Because we have done a similar question in regular class. We did a similar question in marathon also. Let's see how much you remember. Operating profit means EBIT. How much? 6,20,000. That is your existing EBIT. Interest on debentures 10% and interest amount is 80,000. The moment you know interest amount, interest rate, what you can find? Debentures ka value. How do you get debenture ka value? Interest amount divided by interest rate. In fact, we should take interest amount divided by expected interest rate. Here expectations and actuals are same. That means the debenture value will be 8 lakh. 80,000 divided by 10%, which will be 8 lakh. Got it? Remember that question which we did? That same question what we did in marathon is being taken and little extended here. That's all. Okay. EBT we got. Tax rate is 20%. Keep that in mind. PAT. And then they've given 14% preference dividend is 1,12,000. So that means using this, can you find out preference share capital? Same way. How did you find out debt? Interest amount divided by interest rate. If you want to find preference share capital means instead of interest amount, you will take dividend amount. Divided by, instead of interest rate, you will take dividend rate. So 1,12,000 divided by 14%, you do. How much is that? 8 lakh. So preference share capital is also 8 lakh. Earnings available for equity shareholders is 3,20,000. This is nothing but we call it as each. Number of equity shares, each ka face value is 10. But how many number of equity shares we have? 16,000. That means what is equity share capital? Book value of equity share capital is how much? 16,000 into 10, which is how much? 1,60,000. EPS, they've given it to be 20. Fair enough. Reserves and surplus is 9 lakh. Awesome, sir. Because adding these only, what will I get? Adding all this only, all these only, we call it as capital employed. Yes, now all this, if you add only, you will get capital employed. But adding all this, you will get market value of capital employed or book value? Book value. You adding all this, you will get book value of capital employed. Okay, Saru? All right. But hang on, let it be that. We will see if we need to add it or not. If you want, you can add also 16. 16 plus 9 is 25. 25 plus 1 is 26.6 lakh. Yes, correct. 26 lakh 60,000 is a book value of current. I wrote current asset. Is current asset or capital employed? Capital employed. Done, people. Let it be there. Okay, next, let's go forward. Reserves and surplus is 9 lakh. Okay, Namra, this company, Namra, I don't know. They require additional how much funds? 15 lakh for some modernization and expansion. Okay, G. The current capitalization for equity is 20%. Sir, this is your equity capitalization rate, means this is your cost of equity. Okay. Company has a policy to retain 40% of its earnings. This is a highlight of the question. There's a new adjustment. One of the highlight of this adjustment. Because if you observe in all our previous problem, they used to say company has a policy to distribute 100% of earnings. That word used to be given in such problem if you refer. Here 100% is given or 40%? 40%. Keep that in mind. 40% they have a plan to retain. That means how much is your dividend payout ratio? 60%. This is the highlight. Keep this in mind. Okay, there's one newly framed adjustment. The debentures and preference shares are trading at a premium of 10% and 25% compared to their book value. That means book value and market value of debentures and preference shares are same or more? More. Okay, this is your book value. Got it, sir? What we have calculated here is a book value. But market value is same or more? More. Okay, let's read off the question and come to that. The fair value of one equity share is calculated. How do you calculate that? By dividing number of shares to the overall value of the firm. You need to find out the value of the firm. If you want to find market value of equity shares, if you want to find, not me telling, question is saying, if you want to find market value of equity shares, what do you have to do? First, find out overall value of the firm and then divide by the number of equity shares. This is what you have to do to get the price of equity shares. Me or question? Question. Okay. Now check. The equity, what is that, sir? New equity shares for expansion will be issued at 5% discount. Sir, by doing this, we will get, by doing this, what will we get? We will get market value of one equity shares, correct? But you want how much funds for your expansion? 15%. You want how much funds for your expansion? 15 lakh. If you want to raise this funds through equity shares, means will you issue this equity shares at market value or 15% discount? 15% discount. First find market value and reduce 15%. You will get what, sir? You will get what? From market price, if you reduce 15%, you will get the issue price of the equity shares. Not me. All question. Don't look at me. I didn't frame. Okay, I'm just solving. Don't kill the messenger. Okay. No. Check. Return on capital employed, ROSO, should be calculated based on the value of the firm. And value of the firm is always expressed on what, sir? Book value or market value? Market value. That's the reason they give you all this pitilu. More, that means whatever we did here, no. Required or falto? Waste. Because this is book value of capital employed. Can we use book value of capital employed or market value? Market value. Again, we need to find out this. Okay, now. All right. Requirement of the question. ROS is based on the total value of the firm. Now check. The ROS will increase by 10% to its current rate. Rate. So let's say if the current ROS, if it is 20% means, if the current ROS is 20% means, after you do the new project, will the ROS be 20%? No, it will increase by how much? 10%. Don't say I had a 10%. It will increase by 10% to its current rate. That means what you have to do? You have to take 20%, 20 ka. You have to take 20 and multiply it by what? 10%. Basically, it will increase by 2%. So the new rate will be 22%. Is this the actual ROS or just assumed for explanation? This is just assumed for explanation. We need to calculate ROS. First calculate ROS, and to that in your calculator you need to do plus 10%. That way you will get after the new project what is the ROS. Okay. Now if the capital gearing ratio goes beyond 2.5, capital gearing ratio, how do you calculate? Preference share capital plus debt divided by equity. If that number goes above 2.5, then the interest rate on additional debt, sir, you need how much additional funds? 15 lakh. You need additional funds of 15 lakh. That 15 lakh you can raise through debt or preference shares or equity. You have three options. Now they are saying if this capital gearing ratio goes beyond 2.5 means interest rate on the new debt or additional debt will increase by 200 basis points. Sir, 100. This is your government ka terminology. When they say basis point, 100 basis point is 1%. Instead of saying 1%, they will say 100 basis point. 100 basis point is 1% means 200 basis point will be 2%. That means the new debt, what is the existing rate of interest on the debt? 10%. Sir, if the capital gearing ratio becomes, if it crosses 2.5 means, can you raise the debt at 10% or interest rate will increase? It will increase. It will increase by how much? 200 basis point. 200 basis point means 2%. That means the new debt ka interest rate will be 12%. From 10, this will become 12. Not me. Question. Okay, sir. Only that or no? Or even dividend on preference shares would increase by 0.5%. Currently, preference dividend rate is 14%. It will be 14 or it will increase? It will increase and it will become 14.5%. This is the things. Now, no. Underline the key thing. You are required to advise. What are you required to advise? About the two financial plan. We have two financial plan. We need how much additional funds? 15 lakh. That 15 lakh, no. 2/3 of that 15 lakh. What is 2/3 of 15 lakh, sir? 10 lakh. 2/3 of that amount can be raised through debentures. Okay, that means balance 5 lakh will come through preference shares. First option is you will raise the 15 lakh by issuing debt worth 10 lakh, 5 lakh worth preference shares. Second option, you will raise entire 15 lakh by issuing equity shares. Now they are asking which plan should we go for? Plan 1 or plan 2? Okay. Ideally, the answer in that problem should be based on market price. It should be based on market price. In our problem, P multiple and all was given. If you remember, debt divided by debt equity ratio, if it exceeds 35%, instead of 10, P multiple will become 8 or something they had given. That was a problem. So there, market price you could have found. Here, have they given market price or not possible? Not possible. That means we will give our answer based on EPS. You will find out EPS for both the option and select that option which gives you the highest EPS. Understood? Too much of data, simple problem only. Once if you do it, you will get it. When you read the data, it looks like, but once you do it, you'll be like, okay, not that much tools, manage. First observation, we got book value of capital employed. Do we need book value or we need market value? Market value. Why do we need that? Is simple, sir. Sir, we need rows. We need a rows. I'm not talking about your feelings. Oh, for solution, we need rows. How do you get rows? Oh, EBIT divided by capital employed. And capital employed, we need to take book value or market value. Market value. That means what and all are the components of capital employed? Equity share capital, reserves and surplus, debt and preferentials. All these components we should take book value or market value. Market value. First working note is that. Find out the market value of all the instrument, then you will get market value of capital employed. EBIT is given to you in the question already. Then we will see that and we will do it next. Can we take it up, people? Okay, now I have solved it. Just review this. First, sir, how do you get debt? Quickly, don't drift away. Easy only. Easy. Just pay 5 minutes. Attention, problem is solved. Very, very easy only. Everything is easy. Okay, it is just that, sir, first time when you wrote that alphabet A, did you write it properly? No, you used to write. Now, aram se you will write. No. So, that only in life. First time when you try something, everything is difficult. 3-4 times if you do means this problem in your sleep also you'll answer. With working note. This after this after this after this. It will come. Just a matter of little practice. So, first, how do you get debt amount? Interest amount divided by interest rate. Should I have to explain that once again or is it okay? Interest amount is given in the question to be 80,000. Interest rate is given to be 10%. That means debt is how much? 8 lakh. But this is what value? Book value. We want book value or market value? They told in the question, debt is 10% more than book value. I mean, this book value is 8 lakh means market value will be 10% more, which will be 8 lakh 80,000. First one, Damara. Similarly, preference share capital given or we have to find? How to find? Same. Instead of interest amount divided by interest rate, you will take preference dividend amount divided by preference dividend ka rate. What is preference dividend given in the question? 1,12,000. Preference dividend rate was given in the question to be 14%. So do that, you will get book value of preference share capital to be 8 lakh. We need book value or market value? Market value is same or 25% more. As per the question they told, debt ka market value is 10% more, preference share capital ka value is 25% more. 8 lakh ka 25% you do. How much is that? 10 lakh. Till here we have done. Yes, people. Now reserves and surplus, will it have any market value? No. I mean same. Book value, market value will be same. 9 lakh. Yes, Saji. One highlight of the question. Next we need market value of equity denoted by the symbol S. Yeah, this is where you should smile or one thing should click. What is that? First, how much is book value of equity share capital? We have 16,000 shares of 10 each. That means book value of equity share capital is 1,60,000. We want book value or market value? Sir, market value of equity only is denoted by the symbol. Yes, so correct. Yes, sir. Here, no, sir, there is a small change. I can't cut this, leave this. I'll tell you this problem. Normally, what do you do, sir? Normally, how you used to calculate? How do you calculate? Yes, so you know this, people. Value of the firm is given by EBIT divided by KO. That is V. S is what? Instead of EBIT, you will substitute with Each. Yes. Okay. Each divided by cost of equity we will take. Yes, sir. But here there is a small funda. In all our problems we have done so far, the assumption was company has a policy of distributing 100% dividend. Actually, it is not each. The numerator is not each. It is actually dividend. Because I thought that was problem was easy to connect. Hence, I told because no, sir, is EBIT available for equity shareholders or each? Each. So it was easy for me to connect with you on that. Hence, I said each and all. But in all our problems, the policy was 100% of each was distributed as a dividend. Sir, if you do each ka 100%, what are you going to get? Each only. Rather, that is only dividend. Actually, formula is not each. It is actually dividend divided by cost of equity. In all our previous problems, since the each was 100%, we used to ignore that and directly take each. But in this problem, can we ignore that? No. Because what, sir? In this problem, company has a policy. What policy they told? Where is it? Company has a policy of retaining how much? 40%. That means how much are they distributing? 60%. That means we want each, or if you want, you can refine that formula. Instead of each, take it as each multiplied by dividend percentage. Each multiplied by dividend percentage. If you still want to stick with each. Okay, here, how much is the dividend percentage? 40%. If you are retaining means how much are you distributing? 60%. So simply take it as each multiplied by the rate. Each multiplied by the dividend rate. How much you will get, sir? Rate of dividend. Okay, or a dividend, or I'll write it as DPR. Would you be okay with that? What is DPR? Dividend payout ratio. Okay, so how much is each in this problem? Let's not do it this way. How much is this? How much is each? Each we have to calculate, or they gave in the question? They gave in the question. How much is each, pa? 1 minute, I'll show it to you in case you're funded. Earnings available to equity shareholder is 3 lakh ka? 20,000. So take that 3 lakh 20,000. 40% if you're retaining means 60% you're paying. In all our previous problem, it was 100%. So whether you calculated this or whether you didn't calculate, you would have any which way got the same answer. But in this problem, is the company planning to pay 100% or only 60%? So hence, maybe you keep this as a formula. Each multiplied by the dividend payout ratio. This is okay with you? Or simply you can keep the numerator as dividend. That way also you can substitute. Divided by cost of equity. How much is cost of equity given in the question? Cost of equity is given in the question to be 20%. So divide that, sir. How much are you going to get? Quickly do it. How much are you going to get? You should be getting 9,60,000. Confirm for me, are you getting it? So that is what? Market value of equity. Stop there. Once again, tell me what is it? Normally, we used to do what? To find out market value of equity, we used to do each divided by cost of equity. But in all our previous problem, the policy was 100% of earnings was distributed as dividend. That's the reason we never used to do that adjustment. But here it is 100% or only 60%? 60%. Hence, what is the formula? Each into dividend rate. Okay, or you can simply keep it as dividend divided by cost of equity. One of the two formulas you can keep it. That divided by cost of equity, if you do, you'll get market value of equity to be how much? 9,60,000. Online also got this new adjustment. This is the highlight of one of the highlight of this question. Quickly confirm, people. Waiting. Online. This video also will be available on YouTube. Later on, aram se you can copy also. So no need to worry about that. Don't waste your time in writing things and all. Just listen for the time being. Yes, online. Waiting. Okay, response is okay. Now, how do you get market value of capital employed? What and all is capital employed first of all? Debt, or where we will go equity share capital plus reserves and surplus plus preference share capital plus debt. But we want this on book value terms or market value terms? Market. So take your calculator. What is market value of equity? 9,60,000. Market value of retained earnings is same. 9 lakh you add. Okay. Then market value of preference share capital 10 lakh add. Market value of debt 8,80,000 add. How much is that? 37,40,000 is a market value of the firm. Okay, Saru. Now we can find out rows. We can find out existing rows. How do you get rows? EBIT divided by capital employed. That capital employed you have to find out as per the requirement of the question based on the value of the firm. Value of the firm is always expressed on market value of the terms. So refine rows ka formula now. EBIT divided by market value of capital employed. That market value of capital employed is how much? 37,40,000. EBIT is given in the question. Check the question. How much is EBIT? Where it went? EBIT is 6,20,000. So 6,20,000 in the numerator. Market value, which is 37,40,000 in the denominator, into 100 if you do. Existing rows is how much? 16.58%. That is your existing return on capital employed for the current project. Current project. Are you planning to do current project or start a new one also? New one. The moment you start a new project, will the rows be same or they told it will increase? It will increase. It will increase by how much? 10% to its current rate. If the current rate is 20% means the rows will increase by 10% or 10% of 20. 10% of 20, which is how much? 2. But is the rows we got 20 or we got a different number? What did we get? What is our rows? 16.58%. This is our existing rows. After expansion, will rows be 16.58% or it will increase by 10%? How to calculate? Simply take 16.58 plus 10% you do in your calculator. How much is that? 18.24%. So after expansion, your rows will be 18.24. This is the till here okay now? Till here okay? Pakka. So how do you get rows? Tell me the formula. EBIT divided by capital employed. EBIT divided by capital employed. Okay, 1 minute. Hang on. Maybe I'll write one more point. Sir, what is the capital employed after expansion? What is the capital employed after expansion? Before expansion, how much was capital employed? Before expansion, how much was it? 37 lakh, 40,000. It was 37 lakh, 40,000. After expansion, for expansion, are you raising extra money? For expansion, you are not raising extra money, Ada. You are raising 15 lakh, Noda. How much is this, da? 52 lakh 40,000. That means after expansion, your capital employed will become 52 lakh 40,000. So how do you get rows? EBIT divided by capital employed. After expansion, your rows is how much? 18.24%. After expansion, how much is EBIT? Don't know. After expansion, how much is capital employed? 52 lakh 40,000. Now means substituting, won't you get the EBIT of the project after expansion? Yes. Understood? Once more. Got it? Tell me, sir, how do you get new EBIT? After expansion, the new EBIT will be these two ka multiplication. 50, that's what I've written here. These two ka add, if you do multiply 18.24%. Calculate that. 52 lakh 40,000 ka 18.24%. If you do, how much you going to get? 9 lakh 55,776. That's what I've got here. This we wanted. Done now. Almost 60 to 70% of the solutions solved. Fine. Sir, we have to decide. We have one plan to raise this 15 lakh or two plans? Two plans. First plan, 2/3 through debt, 1/3 through preference shares. Second plan, entire 15 lakh through equity shares. Okay. Now they gave one drama. What is that? In that problem, the drama was debt equity ratio. Debt divided by debt plus equity. If it crosses 35%, debt will increase, blah, blah, they told. Here it is debt equity or capital gearing ratio. Capital gearing ratio. So ratio, to calculate ratio, you use financial statements. Ratio analysis is done with the help of financial statements. Financial statements means balance sheet, P&L and all. In your balance sheet, P&L and all, will you show market value or book value? Book. Always remember, ratio ka calculation is always on the book value. Now they have asked capital gearing ratio. I should calculate that using market value or book value? Book value. Understood? How do you calculate capital gearing ratio? Tell me once again. Capital gearing ratio. Capital gearing ratio means using fixed cost instrument to increase equity ka return. So that means numerator will be fixed cost instrument. What are the fixed cost instrument? Preference share capital and long-term debt. Numerator is equity, you can call it, or equity share capital plus reserves and surplus, or you can call it as net worth, whatever name. Yes, people. Now for this, I should take market value or book value. I should take book value. Okay. Do you know book value of debt? Do you know book value of debt? Yes. How much? 8 lakh. We already calculated here only. Existing debt ka book value is 8 lakh. Existing book value of preference share capital is 8 lakh. Okay. In first option, how much money you need? In fact, for expansion, how much money you need? 15 lakh. In first option, 2/3 you will raise through debt. 1/3 you will raise through preference shares. Both are fixed cost instrument. Both are fixed cost instrument. That means totally what, sir? New debt and preference shares will increase. After expansion, debt and preference shares will totally increase by how much? 15 lakh. Or you can do one more thing. New debt will be how much? 10 lakh. New preference shares will be how much? 5 lakh. How 10 lakh? 15 lakh ka 2/3. How 5 lakh? 15 lakh ka 1/3. Like that also you can calculate. But anyway, both debt and preference shares are fixed cost instrument. Instead of breaking up directly, I'll write 15 lakh. Done, sir. This is your fixed cost instrument. Okay, now. Divided by what? Equity. Equity ka market value or book value? Book value. Sir, what is equity share capital ka book value? 160. Retained earnings ka book value? 9 lakh. Add the two. How much you going to get? Add the two. No? Yeah, this is how much? 10 lakh, 60,000. So find the capital gearing ratio. When you find capital gearing ratio, how much are you getting? When you substitute and calculate, you'll get 2.9. You're going there. Why? They told in the problem, if this capital gearing ratio, if it exceeds 2.5, will the debenture carry 10% interest rate? Will the debentures carry 10% interest rate, or it increase by 200 basis points? It will increase by 200 basis points. That means now the interest rate on new debt will not be 10. It will become 10 plus 2%, which will be 12%. Only this or even preference shares. Preference dividend rate as per the question will increase by 0.5%, not me. Currently, preference dividend is 14%. It will increase by 0.5%, means it will become 14.5. Okay, this is what it is. Done, no? Okay. Second option is to raise the money through equity shares. Sir, if you want to raise the money through equity shares, will you raise it at face value or market value? When you are issuing new equity shares, will you issue it at face value or it's market value? Market value. Do you know market value or not yet found? Put one working out to find that. And how to find out market value of equity shares? Should you have to figure out, or they told in the question? They told in the question. In fact, we wrote it also. What is that we wrote? In fact, check here. The fair value of equity shares is dividing the number of equity shares to the value of the firm. You have to take the value of the firm and divide by the number of equity shares. If you do that, you will get market value of 1 equity shares. Me or question? Question is saying. And can you issue this new equity shares at this market value or 15% discount? 15% discount. First, let's find market value. Tell me once again, how do you find out market value of 1 equity shares? Total market value of the firm divided by number of equity shares. So, should we have to find out market value of the firm or already found? Already found. How much is that? Existing market value of the firm is 37 lakh 40,000 divided by number of equity shares. How many equity shares are existing? As per the question, 16,000. This is the existing market value of the firm and the number of shares we have is 16,000. So how much is the market value of 1 equity shares? 233.75. Currently, the market value of 1 share is 233.75. Can we raise the equity shares at this price or 15% discount? 15% discount. 15% discount means 15% lesser price. So take this number and reduce 15% in your calculator. How much is that? 198.69 is the issue price of new equity shares. Okay, G. In the second option, in first option, are you raising any equity shares? No. In first option, your 2/3 of the money will come through debt. 1/3 will come through preference shares. In second option, entire 15 lakh will come through equity shares. Stop. How much money you need through equity shares in second option? 15 lakh. And the value of 1 equity shares for issue purpose is how much? 198. That means how many shares you need to issue? You want to raise 15 lakh and the value of 1 equity shares is 198.69, means how many equity shares you'll have to issue? 7550, because you're calculating EPS. For calculating EPS, you need the total number of equity shares. So this is the extra shares you need to raise. Under which option? Plan 2 or plan 1 or plan 2? Plan 2. Give you a minute. Observe this. Good RTP. Definitely good RTP. Too many things they have brought in. But it is okay. But 1 or 2 times if you practice, you'll get it. Huh?
So why don't we use the market value of equity, which is 9,60,000?
Requirement of the question. But they told fair value of 1 equity shares. You find like this. If they had not told, maybe I could have done like that. He's saying, sir, anyway, you know the market value of equity is how much? 9,60,000. That you divide by number of equity shares. You will get market value of 1 share. Yes, correct only. But question doesn't like him. Question told you find out fair value using this approach. So we can't question the question. So we'll have to go ahead with this. That's a drama. Okay, people. Now question over our last step. Last step. What is that, sir? We have 2 options. Which one will you select? You have to calculate EPS. And this is simple. You know this. How do you calculate EPS? You start with what? You need each. You have to start with sales or you already have EBIT. New project ka EBIT you already have 9,55,766. Start with this number. Tell me the order quickly tell. From EBIT you will reduce interest. So stop, visualize. You will take existing EBIT or after the new project? After the new project, you'll take new EBIT. From that, you will reduce interest. Stop. You already have existing debentures. Only existing debenture is there, also new debentures. On new debentures, you will get extra interest. So deduct that. That means, again rephrase. From EBIT, you have to reduce old debenture ka interest and reduce new debenture ka interest. What will you get? Earnings before tax. From that, reduce tax. What will you get? Earnings after tax. From that, reduce preference dividend on old preference shares. Again, preference dividend on new preference shares. You will get each. each divided by number of equity shares. Number of equity shares is existing equity shares is 16,000. And if you go for equity option, you have to issue extra shares of 7550. Then where you will get the EPS. That's all is a tracker. That's what we have to put it up here. That I have taken the ICICA solution. Can we review that? Quickly we'll review. What is the new EBIT? 955, 766. That we will start. From this we have to reduce interest. First, interest on your old debt. On old debt, how much is the interest, sir? On old debt, interest is 80,000. Okay. On old debt, you have to reduce the debentures to the extent of whether you go for first plan or second plan. Old debt, will it change or this will be same only? This will be same only. Okay. Okay. Again, if you want, you can recollect. In option number 1, what are you doing? Out of 15 lakh, 2/3 will come through debt. That means what is the debt value? 10 lakh. And 1/3 will come through preference shares. 15 lakh ka 1/3 is 5 lakh. This is option number 1. In option number 2, entire 15 lakh will come through equity, just for your reference. Now, how much debt are you raising in first option? 10 lakh. Can you raise the debt at what? 10%? Because old debentures ka interest rate was 10%. Since capital gearing ratio was more than 2.5, the new debentures will have an interest rate of 12%. So how much new debentures are you issuing? You're issuing new debentures worth 10 lakh. On this new debentures, you have to pay interest at the rate of 12%. 10 lakh or 12% is how much? 1,12,000. In second option, new debt is coming in or only equity is coming in? That means, will there be any new interest or no new interest? So from EBIT, you have reduced interest. What did you get? EBT. Reduce the tax. You will get EAT. Now you have to reduce preference dividend 1 time or 2 times on old as well as new. What is the preference dividend on the existing shares? On the existing shares, preference dividend given in the question is 1,12,000. Whether you go for first option or second option, existing preference dividend will anyway continue. Correct? No. Now you will also get dividend on new preference shares. Correct? Which option has preference shares? Both option or first option? In first option, how much preference shares you will issue? 5 lakh. And this preference shares, can you issue it at 14% existing dividend rate or it will increase? Since capital gearing ratio was more, now you have to give a dividend at the rate of 14.5. So how much preference shares you are raising? 5 lakh. Dividend rate is how much? 14.5. 5 lakh ka 14.5 you do. 5 lakh into 14.5 will give you dividend on new preference shares to be 72.5. In second option, preference shares will come or no preference shares? No preference shares. So you will get each. You will get each divided by number of equity shares. How much equity shares is already existing? 16,000. Will that change or same? Same. Under first option, are you issuing any extra shares or no extra shares? That means the extra shares here is 0. So now you can calculate EPS under first option. Each is 420. Total number of equity shares is 16,000. Divide these to how much is it? 26 point EPS. 26.26 is the EPS under first option. Under second option, you already have 16,000 shares. But second option is what option? Equity. So when you're issuing new equity shares, number of equity shares will be same or it will increase? How much new equity shares you will issue? We have already worked out that. How much is that? 7,550. You have to issue under second option 7,550 extra shares. That means the total number of equity shares is how much, sir? Add these two. 23,550. This is your each. This is your number of equity shares. Divide. How much you're getting? 25. Now tell me the conclusion. Which one will you go for? MPS you can't calculate. So you have to decide based on EPS. Lowest EPS or highest? Which is highest? This we are happy. Option 1 you select. That's no. Good question. Okay. But practice. This one I think aram se can be managed. It is okay. The only takeaway is market value of equity. That is one. Till now we used to find out market value of equity SS each divided by equity. Is it each now? It's actually dividend divided by equity. Or if you want, you can use another formula, each into DPR. DPR is in dividend payout ratio. That is one takeaway. Remaining, I think, is okay. Manageable. Yes, no. Because remaining everything was given in the question only. Rows you have to find out using market value. All that we have to remember or data given in the question. The moment you read the question, all that will come back to you. And also keep this in mind. Ratio calculation, always you'll have to do it on the book value. Okay, because you do the ratio based on your financial statements. Unless the question says you calculate based on market value, primarily we calculate the ratios using book value itself. So capital gearing ratio, you take book value and do the things. That is one you need to remember. Rest all, when you read the data one by one, things will keep coming in. Now done part. Now I think you're regretting the decision of doing RTP first, no? Instead of using MTP one first. Okay, this question according to me is done, sir. Can I go for the next one? Sir, every question is like this, sir. No, sir. Next, all simple ones. Yes, online. Can I move on? Can I move on? Two people told I don't want to attend your class. They're going only. It's okay. I was just kidding. Go on. Carry on. Yeah. this is done. Next. Question number 7 is on leverages. Leverage study. A good question. I'll keep this also as an LDR. I mean, another brain spinning, sir. No. 1 or 2 adjustment is new. That's all. Manageable, but still. This is okay, sir. There's not too much kidney they have not used. In fact, if you use little bit of your kidney, you'll get it. Okay, review. Sales they have given. Okay, first, sir, always check. What have they asked? Operating, financial, combined, leverage. For OL, FL and CL, anyway, we need income statement.
Okay.
Yes. For OL, what is the formula, sir? Or tell me. If you want, you can remember it as old C. C for contribution, E for EBIT. Operating leverage is given by the formula contribution divided by EBIT. Then financial leverage will be EBIT divided by EBT. Okay. Financial leverage, if there is no preference shares, is given by the formula EBIT divided by EBT. Okay. If there is preference dividend, EBIT divided by EBT minus preference dividend into 1 minus tax rate. In one of the questions they've asked that. I don't think so this is that question, but anyways, always recall that better. Combined leverage is given by OL into FL. That is okay with you? Okay, that's it. So that means all this anyway requires EBT, EBIT and all. So let's better put up the income statement. So let's read off quickly the data. OL, FL and CL, and they also asked PV ratio. How do you get profit volume ratio? Contribution divided by sales into 100. I mean, pakka I need income statement. Because to calculate PV ratio, I need a sales. Sales is the topmost number. EPS is the bottommost number. Put it. Rows they are asking. And they're also asking EPS. New thing or known? We know how to calculate. Yes. Does Kshitij Limited have favorable financial leverage? I think I told this, but anyway, we'll see that. Percentage change in EPS if EBIT increases or decreases by 15%. So they are trying to measure the relationship between EBIT and EPS. Sir, which leverage measures the relationship between EBIT and EPS? Financial. Operating leverage measures the relationship between sales and EBIT. Financial leverage measures the relationship between EBIT and EPS. Combined leverage measures the relationship between topmost number sales, bottommost number EPS. Here they're talking about EBIT and EPS. So we have to use what formula? Financial leverage. Now they are asking one more last minute. At what level of sales, PAT, there's one more requirement. It is there in the next page. I brought it here only. Sir, I told this question. Sir, some problems may they will use EPS. Some problem may they will use PAT. It is one and the same. So here check. At what level of sales, PAT will be equal to 3/4 of current level. So we'll have to use for this particular combined leverage. I'll tell you how. This one you leave it to me. Rest other things are okay. Basically, we need to find income statement. For finding income statement, they've given some data. Let's see what data they've given. Sales they've given. Awesome. Sir, in these sort of question, first have the format of income statement. Sir, this is a leverage question. For leverage, what is income statement ka format? Sales minus variable cost gives you contribution. Contribution less fixed operating cost gives you EBIT. From EBIT, reduce interest and all the drama will fall. Okay, now first have that format. Particulars, amount, and if it's simple one means we'll do the workings here. This format first you make. And first update what and all data they've given to you in the question. First update in this income statement. What they have given. Let's find. What have they given? Sales. Let's try to mentally remember first. Sales is how much? 180. Fixed cost excluding interest only we call it as FOC. FOC as in fixed operating cost. That is given how much? 45 lakh. Anything else? And they've given debt. Debt will not come. Tax. So tax rate is given. We will see that later. Only these two are relevant. No. So sales is how much? 180 lakh given now. And then they have given fixed operating cost given 45 lakh. These two they have given. Fine, sir. So now let's see. I think this is only relevant. Then we will see missing figure how to find out. And now they are given break even point sales. Good enough. think this is good for me to start. Sir, how do you get break-even point? Tell me. Break-even point not in units. If you want break-even point in units, the formula is fixed cost divided by contribution per unit. We want fixed cost break-even point in units or sales. Sir, how do you get break-even point in sales, sir? Fixed cost divided by PV ratio. Yes, sir. And check here. What do you know? Do you know FOC? Yes. Do you know break-even point? Yes. That means using this, what you can find out? PV ratio. That's a good enough substitute. Can we substitute this? So break-even point sale is how much? 120 lakhs. So let's start with that. Break-even point sales is given by the formula fixed cost divided by PV ratio. Break-even points they've given in the question to be 120 lakhs. Fixed cost they've given in the problem to be 45 lakh. Substituting, you get PV ratio how much? 0.375 or 37.5%. Yes, everybody. This is one of the requirement of the question which we have done, which we have covered. Okay. Yes, sir. All right, this is cool. Next, we will see. And in fact, I think I can proceed here only. How do you get PV ratio? How do you get PV ratio? Contribution divided by sales into 100. And congratulations, sales is anywhere. Sales is anywhere given. So substitute. PV ratio is given by the formula contribution divided by sales into 100. PV ratio just now we got it to be 37.5. Contribution we don't know. Sales is given 180 lakh. Substitute, you will get contribution how much? 67.5. One quick way here is the moment you get the data, push it to the income statement. That will help you to solve the things faster. Contribution now you got how much? 67.5. Update that. Contribution is 60, sir. Awesome. Sales you know, contribution just now you got. That means variable cost is missing or you know. You can find out. How do you find out variable cost? 180 lakh minus 67.5, that is 112.5. This is done. Sir, contribution we found. FOC is given. FOC is given. From contribution, if you reduce fixed operating cost, what you will get? EBIT. This is automatic. This is automatic. Yes, no. So till here we have worked out. So far fine now. Now let's proceed further. What extra information they have given? Sir, this is the little bit you need to worry. They have given not interest rate. They have given cost of debt. They have given KD. They have given KD. Sir, KD considered interest rate or after tax? Sir, it is always, cost of capital is always expressed on before tax or after tax? After tax. You know, there was a shortcut formula to find out cost of tax, cost of debt. What was that? If no adjustment is given, I had given you one shortcut formula. How do you get cost of debt? Interest amount, interest rate into 1 minus tax rate. Yes, sir. Now, cost of debt is given to you in the question to be 9%. Interest, we don't need cost of debt. We want interest because on the interest rate, we calculate interest amount. Yes or no? Yes, this I here is for interest rate. That is not given. Tax rate is given. How much is that? 25%. 25% is 0.25. So calculate, sir. 9% is equal to interest into 0.75. So interest will be how much? 9 divided by 0.75. If you do, how much is it? 12%. So the interest rate actually is 12%. Sir, you know the debt. You know the debt. If you know the debt and if you know the interest rate, can't you find out interest? This is good adjustment. Understood, everybody? Easy only, but good one. Yes. Once more or clear? Clear. That is what I've done over here. Check. First, I found out the interest rate using this cost of debt ka shortcut formula, and I got interest rate to be how much? 12 lakh. Now, can you find out interest amount? Yes. Debt is given in the question to be 90 lakh. Interest rate, we have got it just now to be 12%. How much is the interest amount? 10 lakh 80,000. Now, go ahead and put it in the income statement. Interest is how much did we get it? 10 lakh 80,000. Sir, EBIT we got it. EBIT we already got it. Interest just now we got. How much is that? 10 lakh 80,000. From EBIT, if you reduce interest, you will get earnings before tax. Tax rate is anyway given in the question to be 25%. So reduce that, you will get earnings after tax. We read the question, there is no preference dividend. That means each will be 8.775 lakh. Till here we have got all the numbers. We have read the data and we have got the numbers. Yes, sir. Okay, come back to the question, sir. What else they have given? I've used this info. Equity share capital. Again, use this information. How much is equity share capital? 150 lakh. Each equity shares ka face value is how much? 100. So how many shares you have? 150 lakh divided by 100. If you do, you'll get 1.5 lakh. 1.5 lakh. For EPS calculation, we need number of shares. How much is the number of shares? 1.5 lakh. That we just now got. Putting it in here. That's what I've done here. 150 lakh divided by 100 will give you a number of shares to be 1.5. Each you know, number of shares you know. EPS is difficult or got it? Got it. Income statement fully solved. Okay, we will. Now using this income statement, first requirement, OL, FL and CL. OL, FL, CL, you need my help, sir. Contribution divided by EBIT. There is no preference shares any which way. That means financial leverage, fancy formula or normal formula? Normal formula. Combined leverage also normal formula. PV ratio also was one of the first requirement. PV ratio we have to find or already found. So first requirement fully we have completed. Need a minute or carry on? Okay, let's go for second requirement. Second requirement, they've asked rows. How do you calculate rows? EBIT divided by capital employed. Sir, EBIT, we have it here. How much is EBIT? 22 lakh 50,000 divided by capital employed. Here we have only two components. Equity share capital, reserves and surplus not given. How do you get capital employed first of all? Equity share capital, add reserves and surplus, add debt, add preference share capital. Reserves and surplus information, preference share capital information not given. Only equity share capital and debt they have given. How much is equity share capital given? 150 lakh. Debt they have given to be 90 lakh. Both are given in the data only. Okay now. So if you add these two, you'll get 240 lakhs. Calculate rows. How much? 9.375. In the same requirement, they also asked EPS. EPS we have to find or already found? Already found. How much is that? 5.85. Copy that again. Second requirement is also done. Okay, G. Third one, they asked, once again, I'll read that third requirement for you. They're asking you, does this Kshitij Limited company have favorable financial leverage? Sir, financial leverage measures financial risk. It measures financial risk. Now, 1 second. Sir, how much is the rows you just now got? Tell me again. Rows, just now we got it to be, you calculated rows and you got to be 9 point. Or here only, I'll write. Rows is equal to 9.375%. Okay. Financial leverage measures financial risk. Sir, did you take a debt? Yes. On your debt, how much interest are you paying? 12%. Happy or sad face? Happy or sad face? Sad face. Why? Sir, you are borrowing a debt and giving on that debt. How much cost? 12% cost you are incurring. But using the debt, you have done a project. You have done a project. That project is giving you a rose as a return of only 9 point. That means taking the debt was a good decision here or bad? Sir, if it's a good decision, we say it's a favorable financial leverage. Bad decision means unfavorable. Tell me here, favorable or unfavorable? Your interest rate is 12%. Your cost is 12%, but your benefit is only 9%. I mean, this is an unfavorable financial leverage. The company does not have favorable financial leverage. That's what we need to write. Suppose if it was ulta scenario means, if the rose was 15%, cost of debt is only 10% means good decision. Because your cost is 10, your return is, benefit is 15. In that case, it will be favorable financial leverage. But in this problem, it is favorable or unfavorable. Or rather, it is not a favorable financial leverage. Good theory question. I think I did discuss this when I did marathon. Anyways, no problem. Now the numbers we have to kind of connect with that. Carry on. Next requirement, I'll read that requirement once again for you. Change in, they are asking you to find out percentage change in EPS if EBIT increases or decreases by 15%. Which leverage measures the relationship between EBIT and EPS? Financial leverage. How do you get financial leverage in percentage formula? Tell me. That we call it as a degree of financial leverage. How do you get that? Percentage change in EPS divided by percentage change in EBIT. They said EBIT has changed by how much? 15%. Sir, you already know financial leverage. This is a formula. Okay. You already know financial leverage. How much is that? 1.921. Percentage change in EPS we have to find. Percentage change in EBIT they have given it to be 15%. Calculate. If 15% there is a change in EBIT means EPS will change by how much? 28.84%. Sir, how it will change? Or rather, in which direction it will change? Sir, if EBIT increases by 15% means EPS also will increase by 28.2%. If EBIT reduces by 15% means rather EPS also will reduce by 28. That's what we need to write over here. Okay. Because they have given both increase as well as decrease. Understood? You need to call out that. In fact, I think here they told both increase or decrease or only decrease. Don't increase or decrease. So that means we need to answer on both the terms. Okay. Will it move in opposite direction or leverage is same direction? Same direction. But it will move at a same pace or higher pace? higher pace. That's all. Last requirement can we do? What is the last requirement? Check. One by one you read, you'll get it. Okay. At what level of sales? That means you need to find at what level of sales means sales is given or we need to find. We need to find sale value. That's the first thing. At what level of sales PAT will be equal to 3/4 of its current value. PAT should become 3/4. PAT should become 3/4 of its current value. What is current PAT, sir? Check. Current earnings after tax or profit after tax is 8,77,500. Write that. Current PAT is 8.775 lakhs. Okay. It should become this number or it should become 3/4 of this number. So calculate 3/4 of this number. I am telling or question told? Question told. Okay. It should become 3/4. 3/4 means how much? 6,58,001,1250. Okay now. Fine. That means here PAT is increasing or reducing us, sir. From 8.5 it is becoming 6 point something, means it is actually reducing. Find out the reduction percentage. Find out the reduction percentage. How do you find out the change percentage? Change in amount divided by original amount into 100. Calculate. From 8 it has become 6 means how much is the reduction? These two come minus you do. How much is that? These two come minus is how much, people? 2 point something. Okay. Divided by original amount. How much was the original amount? 8.775. That you will get it in percentage. How much is the percentage reduction? 25%. If you want, you can prove it also. So take 8.775 lakh minus 25%. You do in your calculator. What are you getting? Obviously, you will get 6.58125. That is what they are trying to say. Okay, Saru? Yes. That means indirectly they are saying what, sir? PAT has reduced by 25%. Now they have given PAT. They have given you PAT. They have given you PAT ka reduced percentage. They are asking you how much is sales. Now tell me which leverage measures the relationship between sales and PAT. Sir, you can call it as PAT or you can call it as EPS. One and the same. I told you, right? They all go hand in hand. In fact, one question also we did and I told it to you clearly on this. So that means what, sir? Which leverage measures the relationship between sales and PAT or sales and EPS? Combined leverage. What is combined leverage ka formula? Percentage change in EPS. Here we will write EPS or we will use question ka data. Instead of EPS, what have they told? PAT. That means combined leverage ka formula will be percentage change in PAT or EPS divided by percentage change in sales. Combined leverage missing or no? How much is that? 5.7693. PAT ka change, yes, no, we found out. PAT has reduced by how much? 25%. So that means sales will reduce by how much? Solve. Sales will reduce by 4.33%. Yes. They've asked you sales ka reduction percentage or sales value? Sales value. So because of this, if PAT reduces by 25% means sales will reduce by 4.33%. Currently, what is our sales, sir? We already know. Currently, what is our sales? 180 as per our income statement. Current sales is 180 lakh. From 180 lakh, it will reduce by 4.33%. So it will become how much? 1 point. I think they asked what in this problem, new sale value or percentage only?
Sale value.
At what level of sale? That means you need to find out sale value. Okay, so what is the sale value, sir? 172.2. That's all. Easy only. Yes, no? Manageable, I think. This is not that much of head spinning question, I believe. Okay, no? Wait, carry on. Sorry, enough, sir. Hey, wait. 2 more questions are there. 2 more questions. Easy. Sir, you tell everything easy. Because it is easy only. Need a minute to review or okay? This no need for any recap. No, this is a simple one you can manage. Okay, next one, G. Next one is a dividend decision. I was so happy seeing this question. I thought repeat and I thought I will just go on. Unfortunately, ICA gave second requirement. This first requirement is ditto our class question. Ditto class question. It was a previous RTP question. Till here it is the same. I thought, hey, aram se one question I can cut off. But ICA doesn't like me cutting off. They gave one more requirement. Because of second requirement, unfortunately, now I have to do. For me, sad. Okay, let's see what this question. Simple question only. But second requirement has one concept. So we need to be aware of that. Mr. A has gathered following information for his analysis. That's his problem. A company pays regular dividend on a quarterly basis. Sir, this is a dividend decision. That too, if you read the requirement, you need to calculate the price of the share using Gordon and Walter. Gordon ka formula in your sleep also you will tell. Walter ka formula to literally you will write it in your left hand only. Yes, no, that many times you have done. You should remember all this. Yes or no? We need to find the price of the share using these two models. Let's see. Or I am telling, let me not be overconfident. Tell me Walter ka formula. వాల్టర్ కా ఫార్ములా ఒకసారి చెప్పండి పా. சொல்ற மச்சான், என்னடா ஃபார்முலா? ஏழு குரு ஏன் ஃபார்முலாமா? டி நாட் வால்டர் not garden, Walter model. D plus R into E minus D divided by cost of equity, whole thing divided by cost of equity. Now Gordon ka formula is P naught is equal to, if they give you D naught information, D naught into 1 plus growth rate divided by KE minus growth rate. If they give you D1 information, D1 divided by cost of equity minus growth rate. Fine. And we have one more formula, E1 into 1 minus B divided by KE minus BR. That is also one more there. Depending on information, whatever is available, you use. Now let's see what we can use. Company is paying regular dividend. Okay, great. That is their problem again. But they are paying on what basis? Quarterly basis. Sir, when we say dividend in the formula, that is annual dividend. It is annual dividend. As far as my knowledge goes, as far as India is concerned, in a year there are 4 quarters. In 1 year there are 4 quarters. Every quarter, how much dividend are you paying? 3 rupees. You're paying the dividend on a quarterly basis and you're paid how much dividend? How much dividend have you paid? 3 rupees per quarter. In a year, there are 4 quarters, means what is the annual dividend? 3 multiplied by 4, which is 1. Sir, this dividend company is contemplating, thinking to pay or already paid? Check it. Company pays regular dividend on the quarterly basis and the last interim dividend declared. Declared means dividend is already paid. So D1 or D0? D0. How much is D0? 12. They have given quarterly dividend. We have to convert it into annual dividend. Same ditto question we have done in class. No change at all. This and all is same. Okay. Now, owing to market research, company ka turnover will increase by 25% growth rate, it seems. Okay. This is not dividend ka growth rate. Sir, we want dividend ka growth rate. They have given 25% as a growth rate for what? Turnover. Turnover means sales. Okay. Let's see. In the last 5 years, that is their problem again. Company expects the following rate of return on investment. This only we call it as what? R. Check the R. But R may they have given one number or various probabilities. Okay. If first case happens, means the rate of return on investment will be 20%. And there is a 30% probability that first case will happen. And there is a 60% probability that second case will happen and return on investment will be 15%. There is a 50% probability that third case will happen and the return will be 20%. Sir, when they give you multiple scenario and multiple probabilities, what you have to do? Simply multiply. So 20 ka 30%, 20% into 0.3 you do, how much is it? 6%. 50 ka 0.6 you do, how much is it? 9%. 12 ka 0.5 you do, how much is it? 6%. Add all this, how much you going to get? 21%. That is your R. That is the rate of return on investment. We need R, no sir. To calculate Walter and Gordon, we need a R. That is your R. R is how much? 21%. Okay, Saru. Any problem? Ditto question. Just various return you take and various probability percentage you multiply. Same question. No change in our class notes. Everything ditto here. Alright. Now, retention ratio over the last 5 years is, so normally they will give you one retention ratio. Here they have given retention ratio for 5 years. So what we should do? Take the average. Take the average. 40. How do you find average, sir? They have given you 5 years data. How to find average? Add all the 5 divided by 5. 40 plus 65 plus 50 plus 45 plus 30 divided by 5 you do. How much you going to get? 46%. This is what? Retention ratio. Retention ratio is given by the symbol B. Okay. Sir, the moment you know R, the moment you know B, can you find out growth rate? How do you get G? B into R. B is 46%, 0.46. R is 0.21. Multiply. 0.21 into 0.246, you do. How much is the R? You will get R to be 0.0966 or 9.66%. You got your growth rate. That's all it is. Done, Nasaru? Okay, now I think you have all the information. Current interest rate on GOI. GOI as in Government of India. Treasury bond. Sir, government bond, RBI bond and all are risk-free or what is it? It's a risk-free instruments. That means government ka treasury bond is giving 4.5%, means what is this 4.5%? This 4.5% is your RF. It's your RF. The moment RF comes, which model? Capital asset pricing model. How do you get cost of equity using CAPM model? RF plus beta into RM minus RF. What is risk-free rate of return? 4.5 plus beta. Beta is how much? 1.3 into our market rate of return is only, we call it as RM. RM is 12.5 minus RF is 4.5. By doing this, you will get cost of equity using CAPM model to be how much? 14.9%. Because to apply Walter Gordon, we need cost of equity also. So hence we have used CAPM and got cost of equity. All the data available. Can we plug in the formula now? Tell me what is Gordon ka formula again? Gordon sir ka formula. Gordon. They have given D1 or D0. Tell me the formula from D0. D0 into 1 plus growth rate divided by cost of equity minus growth rate. Dividend paid is how much? 12 into 1 plus growth rate. Growth rate we just now got it to be 9%. Cost of equity just now we got it to be 14.9. Substitute, you will get the price of the share to be 250. Okay. Just that components was not given. We have to find those components here. That's it. Done, sir. This is as per what, sir? Gordon. Only Gordon. In fact, this till here same we have done. Similar question is available in our class notes. Absolutely no change. But one more extra they asked here to find out price of the share using Walter. Here Walter, no, you need to make an assumption. Now stop. Walter ka formula you tell once. You know this actually. You should be knowing this. Not D plus R into E minus D divided by cost of equity. Whole thing divided by cost of equity. Fine. Now anywhere G came in here. In that Walter ka formula, G is there. Now means Walter assumes growth rate or dividend to be constant. Constant. Growth rate is only applicable for Gordon. So that means that one point you should not forget. So in Walter model, we assume that the dividend is a constant. Okay. So don't add growth rate to the dividend. How much dividend you already paid? 12. This year, if you have paid 12 rupees, means as per Walter model, next year you will pay more or same. Okay. D here becomes 12. Okay. In fact, you know this because in the formula, if there is no growth rate, means obviously growth rate is assumed to be. In fact, there is no growth or no growth. No growth. That means how much will be D here, sir? In this formula, how much will be D? Dividend, D will be dividend paid, which is how much? 12. Plus R. R is missing to us or given? In fact, R and cost of equity is missing or we found out. R is 21%, cost of equity is 14.9%. So R and cost of equity is given. But only one component is missing. What is that? E. E is what? E stands here in this formula what? In this formula, E stands for what? EPS. Given or missing? Directly not given, indirectly given. How? Simple. B. How much? 46%. B stands for what? Retention ratio. Retention ratio means how much earnings you are retaining. How much earnings you are retaining? 46%. Sir, if 46% of earnings you are retaining means how much earnings are you distributing? That earnings distributed only we call it as a dividend payout ratio. So dividend payout ratio is what? 54% of EPS. 54% of EPS. That means what, sir? Dividend. Indirectly, can I tell like this? Dividend is equal to 54% of EPS. Yes. Dividend, you already know 12. Dividend, you already know 12. 12 is equal to 0.4 times of EPS. Therefore, EPS will be how much? 12 divided by 0.54. How much is that? So you will get EPS to be 12 divided by 0.54. If you do, you will get it to be 22.2. Now you got EPS also. Substitute all the numbers, you will get the formula. So the crux why I took up this question is one, to find out EPS. EPS also you can figure it out. But you should not take. Sir, here you have taken a dividend of, you have added growth rate. For Gordon, you will take the growth rate. For Walter, will you add growth rate or you will take the same dividend? You will take the same dividend and do the calculation. That's all. Because under Walter model, the assumption is the dividend remains constant. That is one I wanted to put it across. That's a highlight of this question. Otherwise, pretty manageable question. Over. Sir, RTP over, sir. One last question, Macha, and you and I can finish this question. Can we go for that next question? Good kidney question. Management of working capital LDR question. Last day revision question. In fact, I was also, when I read the question, I was feeling happy. Then unfortunately, they brought in some extra parameters and made me unhappy. Because similar question we have solved in the class. This is there. But few extra fittings they bought in. I thought skipping will not make sense. We'll have to do it. Alright, now what is this? We will see. Management of working capital. The management of Payasam Limited, they're planning to expand, ante. That is again their problem. Leave all that goalie they've given, that's okay. A requirement of the question, we will come to it. What you need to find is where? You need to prepare estimated working capital statement. You need to prepare. That is a requirement. Okay, na. That is what you need to ask. Sir, you know how to prepare working capital statement. How do you prepare? Just now we prepared in today only. You have to estimate current assets and current liabilities. Yes. Okay. First, let's read the data. Carefully read the data. Here are some new pointers are there. In fact, this question, first part of the question is same. It's a study material question. One part. We have solved also. Few extra fittings, that's all. So it's an added question which was already there. They've added a new pointers, that's all. So not entirely new, just an extended version of an existing question. Okay. What I'll do? Fine, I think I'll go with this approach. Material used. Domestic on 2 months credit, 9 lakh. Sir, you have an option to purchase the materials locally. You also have an option to import. If you purchase it locally, creditors will give you how many months credit? 2 months. And how much purchases have you made locally? 9 lakh. Okay. If you go for import, you will get how many months credit? 3 months credit. How much purchase have you made? 6 lakh rupees. Once I'll do a thing, I'll not start with the solution. I will read all the data for you so that it becomes easy. Then we will read the question once again and solve the question fully. Okay. Payment of wages. Lag in payment of wages 1 month. Lag means what is this, sir? Outstanding. There is an outstanding wages to the extent of 1 month. What is the total wages? Outstanding we have to find. What is the total wages they've given? 6 lakh rupees. Okay. Next, lag in payment of manufacturing overheads. Lag means again there is outstanding. How much outstanding? Half a month. But what is the total manufacturing overheads as per them? 26 lakh 40,000. Okay. Sales, sir, we are doing just like materials. We are selling locally also. We are also doing export. If you sell locally, domestic, we give to our local debtor how many months credit? 1.5 months credit. But however, if you export, if you do an export sales, we will give a credit of 3 months. And export ka selling price is 10% below domestic price. That means export. Sir, if you sell the product, domestic sale, if it is 100 means, if domestic ka selling price is 100 means, export ka selling price will be 100 or 10% lower. 10% lower. Me telling or question telling? This is one. Okay, Zaru? This is one. Admin expenses is payable in advance. Advance means it is a current asset or current liability. Current liability. Yes, sir. Sir, if you're paying something in advance, what is it? It's a prepaid expense. No, prepaid expense you show under current liability. Yeah? No, it's a current assets. Yes, no. How many months? 3,60,000 into 2 by 12. Correct? No. Yeah, no. You're looking at me differently, pa. Okay, no issues. Lag means outstanding. So how much is the selling and distribution expense? 3 lakh totally. How much is lag? Full or 1 month? 1 month is outstanding. Outstanding means current asset or current liability. Current liability portion. We'll figure out all that later on. Advance income tax. Sir, if you pay a tax in advance, prepaid taxes and all is current liability or current assets? Current assets. Prepaid expenses. How much have you paid? 25,000 for the quarter. Falling in the next financial year. Next year ka tax you paid this year only. So Darala Prabhu you are. Government is already putting so much of chuna. You already paying more tax in advance that too. Okay, no problem. You have a lot of money. Now look at this question. In this adjustment. Manufacturing overheads is inclusive of depreciation. Yo. Sir, we prepare working capital on a what basis? Total cost basis or cash cost? Cash cost. Cash cost means depreciation should be considered or ignored. But they have ignored or they've included? Included. So what we should do? Can we take this manufacturing overheads includes depreciation? Can we take this number or reduce depreciation? How much is depre? Is inclusive of depreciation of new machinery, and this new machinery ka purchase price is how much? 24 lakh. Depreciation rate is how much? 10%. Calculate depre. 24 lakh ka 10%. How much is that? 2,40,000 is the depreciation included. We have to include or eliminate? Eliminate. That means we can't take this number. From this number, we have to reduce 2,40,000. That understanding everybody has got. Carrying on. Next, where is it? Here. Cash gross profit is 20% on domestic sale. Domestic sale ka GP percentage is 20%. Sir, import also, will it have same GP percentage? No. Because it's domestic ka and export ka selling price same. No, if domestic if you're selling the product at 100 means export you will sell it at 100 or 10% lesser. 10% lesser as given in the question. That means will export have same GP or lesser percentage? Lesser. We will find out that. This is a common working. This is a ditto. This part is done. It's the same question in our ICA study material and we have done it also in the class. However, to promote exports, Export Promotion Council, some government body, is ready to give you a revenue subsidy. In fact, I discussed this in investment decision. Whenever you receive a subsidy, if it is related to asset, you will reduce it and then calculate depreciation. Sir, if it's related to asset means it's a revenue subsidy or capital subsidy? If it's related to asset means it should be a capital subsidy. Here they mention capital subsidy or revenue subsidy. I mean, so should you reduce this from the cost of the asset and then calculate depreciation? No, we should not do. If you have to reduce means this should not be revenue subsidy. It should be a capital subsidy. Here it's a revenue subsidy of how much? 2.5% of the new machinery purchase. Sir, how much did you buy the new machinery for? 24 lakh. So calculate the value. 24 lakh ka 2.5% subsidy you will get. How much is that? 60,000. They should have mentioned, okay, they've adjusted this subsidy. In fact, we have to adjust this subsidy from your manufacturing overhead itself. In fact, they have not accounted is what they're trying to take indirectly. Okay. That means will your overhead cost will be 240 or there is a gain? Sir, subsidy if you receive means it's a expense or it's a gain? Gain. All right. So this gain is reduced from manufacturing overhead itself. How much is that gain? 60,000. So if you net off this, how much is your net manufacturing overheads? From 26 lakh 40,000, if you reduce 240, you will get 24 lakh. If you reduce 60 again, you will get what? 23 lakh 40,000. That is a net number of manufacturing overheads. They have not accounted this is what they had to tell that they missed out. Maybe they'll correct it. It's okay. Fine now. That subsidy they have not accounted is in what indirectly they are trying to say. Fine. We have to reduce this from here only. Next, look at this question. That Parvasam Limited company, they submits LOC, letter of credit to its bank to avail all export sales value within 9 months. Within 9 months. Within 1 month. What is this letter of credit is? Suppose, sir, I got a customer from Japan. He said, ching chong chung chung chung, I want to buy sales worth of product worth 100 crore rupees. I didn't understand his language, but I understood money ka language. He told how much money? 100 crores. I am full on the moon. He wants to buy goods worth how much from me? 100 crore. That bugger is asking 5 months credit. How many months credit? 5 months credit. Sir, I don't know that customer. First time I'm transacting with him. How many months credit is he asking? 5 months. Okay. But I don't want to lose this order. Because it is a huge order. So in this case, what I'll do is, boss, Japanese customer, I don't know you, you don't know me. No problem. We will transact. Give me an LC. LC is letter of credit. He told, no problem. I will give you letter of credit. I'll put signature and give you. I'll be like, hey, that is not letter of credit. I don't want you to give the letter. I want your banker to give the letter. I want your banker to give a letter saying what? If that customer defaults, banker will pay me. I can't trust the Japanese customer. Can I trust Japanese bank? Yes. That is your LC, letter of credit. Okay. And that LC I will utilize within how many months? I mean, should I have to wait 3 months to get money from my export customer or only 1 month? I mean, is this 3 relevant for me or only 1 month? We have to take only 1 month because of that LC option. If that LC option was not there, means credit period I would have taken it as 3 months. Because to calculate debtors, remember you know how to calculate debtors? Tell me how to calculate debtors. In the working capital management today only we did. Annual cash cost of credit sales divided by 12, 365 or 52 into credit period. That credit period we should take 3 or here in this problem 1. 1. For what? Export sales. For domestic you will take same. Okay. That's a drama. And do you think bank will all give this LC at free of cost? What? Their bank is there to do some charity work here. Huh? Bank told, no problem, I will give you, but I will charge a fees of how much? 5%. How much ever is your export sales, on that I will put your tuna off 5%. What is your export sale? 24 lakh 80,000. 24 lakh 80,000 is your export sale. Means bank will charge how much for SLC fees, commission? Huh? 1 lakh 24,000. So 1 lakh 24,000 is our LC charges. This also is not accounted. We should account it. Okay. In this data, whatever data they've given, see, in this data, whatever they've given, have they included all that subsidy, LC and all? They've not included. But should we ignore them or consider them? Consider them and work it out. Subsidy we already accounted. We reduced it from the manufacturing overhead. Why? Because this was relating to machinery. This was relating to machinery. And to produce the goods, I need a machinery. I mean, this 60,000 subsidy becomes your indirect cost or your direct. But it's a direct cost or a direct gain? Direct gain. Hence, I've reduced it from overhead itself. Done now. Pakka. Move on now. Where was I? Here. Company keeps 1 month of stock of raw material and finished goods each. So, stock of raw material is 1 month. Finished goods ka holding period is 1 month. Goods remain in process. Remain in process means WIP. For how many months? Half a month. With 90% raw material introduced in the process. What is this 90%? Degree of completion. For raw material, DOC is given to be 90%. For conversion cost, if they don't give, we will take it as a 50%. We'll see. Company believes in keeping a cash balance of 150. There is a safety margin of 50%. Good question. Okay, sir. 1 or 2 new adjustments. Otherwise, ditto question as per our class notes. We will see one by one what to take care of. First, we will calculate this. Sir, on domestic sales and export sales, we have same selling price or different selling price? Do we know that selling price or we only know sale value? We know only sale value. But it's okay. We can do a small working here. Look at this. Excuse me. In fact, one more data is there. Sorry, I did not read that. Raw material imported. Sir, how much did you import raw material? Somewhere we saw here. Raw material ka import is how much? 6 lakh. 6 lakh. Okay, you have imported raw material worth 6 lakh. If you import raw material means it will attract a custom duty of 20%. That means on this raw material you have to pay, on this import of raw material you need to pay extra tax of how much? 20%. That means is your cost 6 lakh or more? So it will be 6 lakh or 20%. Correct? But at the same time you will also get a duty drawback of 5%. Duty drawback means government will give you the money back. How much money back they'll give? 5%. So calculate 6 lakh ka 5%. Or directly you can calculate 15%. 20% you are paying to the government. Government is giving you back 5%. That means essentially how much are you paying? 15%. Calculate individually or same, your choice. How much is this? 6 lakh plus 1 lakh 20,000 minus 30,000. So this will be 6 lakh 90,000. That means is my material cost 6 lakh or 6 lakh 90,000? 6 lakh 90,000. That too on what? Domestic or import? Import. That means I should take this number and do my calculation and not this particular 6 lakh. That's another fitting. Okay now. Okay, everybody. So let's starting the working out. First, let's do this export and domestic drama. I want to know on my domestic sales, what is my GP percentage? And on my exports, what is my GP percentage? Both I want to know. Have they given the selling price or not given? Not given. So you can assume any numbers because we want percentage. You can take any number, answer will be same. For simplicity, I'll assume that let the domestic sales be 100. Instead of, if you don't like 100, you can take 1000. You can take 1 crore. Doesn't matter. Answer will be same. Let the domestic sales be 100. Sir, they told in the question, if you remember, they've given gross profit on domestic sales somewhere. Where is that? The gross profit on domestic sale is how much? 20%. Sir, domestic sales ka sale value I've assumed it to be how much? 100. If this is 100 means the gross profit will be 100 ka 20%, which is 20 rupees. Okay, people. Sir, sales minus GP will give you what? Sales minus GP will give you what? COGS. Sir, if sales is 100, GP is 20 means cost or COGS will be 80 rupees. Any problem? You can call it as cost or you can simply call it as COGS. Done, G? Everybody cool, G? Let's write this now again. Now particulars, domestic and export. I've assumed the domestic sale ka sale value to be 100. If this is 100 means the cost will be how much? 80 and GP will be 20. This is just now we found out. Yes, no? Any problem? Any problem? Any problem? No. Now, if domestic ka selling price is 100 means export ka selling price will be 100 or 10% lesser? 10% lesser, I telling or question told? Question told. That means if this is 100 means export sale will be 100 ka 10% lesser, which is 90. Sir, sale value may be lesser. Cost will change. Cost, if this is 80 means here also cost will be 80. It is just that what, sir? After producing the goods, some goods you are selling it locally. Some goods you are exporting. Cost will change or same only. So here if it is 80 means here also it is 80. That means how much is GP over here? 10. Now we can calculate GP percentage. Tell me how much is GP percentage? How do you get GP percentage? GP upon sales into 100. GP here is 20, sales here is 100. So calculate 3 divided by 1 into 100. That's what I've done. How much is this? 20%. In fact, this we have to calculate or given. This was anyway given. Now I want to know export ka GP percentage. Calculate that. How much is that? GP divided by sales into 100. 10 divided by 90 into 100 if you do, you'll get 11.11%. That is your gross profit on export sales. Yes, people? Till now, no, sir. We found out the value of debtors. How? Cost sheet. Cost sheet, yes. But here we have one debtors or two debtors. One on export, one on domestic. That's the reason we need to have all the data. Domestic, export like that. Manageable. So we need to partition and do it. So let's do that now. Let's find out the debtors as an X working out. Okay, first, sir, do you know sales? Actual sales of domestic, do you know? Actual sales. Missing or given? Sir, actual sales. Missing or given? Given. Sir, actual domestic sales and actual export sales, they've given in the question. Check the question. Where is the question? Engar kapa. Sales, where is it? Domestic sale is how much? 30 lakh. Export sale is how much? 24 lakh, 80,000. Copy. 30 lakh and 20 lakh, 30 lakh and 24 lakh, 80,000. So total if you do, you will get 54 lakh, 80,000. Now do you know GP percentage? On domestic GP percentage is 20. On export it is 11.11. Sir, if you know GP percentage, can't you find out GP? How much is GP? How much is actual GP? 20% of sales. 30 lakh or 20% is how much? 6 lakh. 24 lakh 80,000 ka 11.11% is how much? Calculate. 2 lakh 75, 528. Sir, sales you know, GP you know. What you can find? Sales minus GP will give you what? Cost of goods sold. Or you can also call it as cost of production. That's okay. How much is this? 24 lakh, 22 lakh, 4,472. So total if you do, you will get this much number. Till here everybody is comfortable. Any problem or any reservations? No problem. Absolutely cool. Okay. Now, sir, we have got cost of goods sold. In our cost sheet, we used to get COGS. After COGS, what you used to do? Visualize your cost sheet. We need to add what, sir? Administrative expense, selling and distribution expense. We need to add. But hang on. You will incur administrative expense only for domestic sales or both? Both. Selling expense you will incur only for domestic, only for export or both? Both. That means you need to split. In what ratio? Sales ratio. Basis. We have to use one basis. So here the splitting of expense is done in sales ratio. What is sales ratio? 30 lakh is to 24 lakh, 80,000. What is administrative expense? Check the question they have given. The admin expense given in the question here. Administrative expense is how much? 3 lakh 60,000. This admin expense is only for domestic, only for export or both? Both. The total administrative expense is 3 lakh 60,000. You have to split using what ratio? You will split this in what ratio? Sales ratio of 30 lakh is to 24 lakh 80,000. So 3 lakh 60,000 you apportion in 30 lakh is to 24 lakh 80,000 wala ratio. When you calculate, you will get how much? 1,97,080 apportion for domestic, balance is apportion for export. Till here okay now? Yes sir. Sir, we have only admin expense or also selling expense? Selling expense is also given in the question. If you want quickly, I'll show you. The selling expense is how much in the question? Selling and distribution expenses 3 lakh. So total selling expense is 3 lakh. You will incur selling expense only for domestic or even for export. So what you will do for this 3 lakh? Same. In what ratio? This 3 lakh you will split between domestic and export in what ratio? Sales ratio. In this ratio you distribute 3 lakh. For one you calculate. 3 lakh in this ratio you distribute. How much are you going to get? 164, 234 and 135 balancing figure. Okay now? Yes. Sir, is this the only cost or there is one extra cost? Sir, you took an LC. You took an LC bank gave it at free of cost or they charged money? Charged money. How much money? 1,24,000. How did you get LC? They told LC ka charges is 5%. LC is for export, domestic sale or export sale. What was the export sales value? 24,80,000. So the charges is 24,80,000 ka 5%. How much is it? 124. Make me happy. This 124 you will apportion between domestic and export or only export? Only export. This 124 should come only under export. Done now. By doing this, what you will get? Cost of sales. Cost of sales. So what about opening stock of WIP, closing stock of WIP and all? Existing company. Existing company. If closing stock is 1 lakh means opening stock also will be 1 lakh. Whether you bring it in the format, you don't bring it in the format, it doesn't make a difference. Shortcut. Okay, G. Comfortable, G. So that means how much is cost of sale? This number. Once you get cost of sale, easily you know how to do the debtors. Make me happy. How do you get debtors? How do you get debtors? How do you get debtors? Annual cost of sale. This number is for annual basis. I mean, here the data is given in days, weeks or months. So 2761,314 is for 12 months. Are you giving 12 months credit to your domestic customers? No. You are giving how much credit to your domestic customers? 12, hey, one sales macha, 1.5 months. So into 1.5 divided by 12 you do. 2761,314 is for 12 months. For 1.5 months, how much? That is a debtors relating to the domestic sales. For export, you give 3 months credit, but will we take 3 or only 1? Why 1? LC. Because of LC. We'll utilize LC within 1 month. So hence, cost of sale for export is 26,27,158. This is for 12 months. Will we take 3 or will we take 1? Into 1 by 12. So this number into 1 by 12, if you do, you'll get this much is the debtors relating to export. Adding these two, you'll get the total debtors, which you have to show in your working capital statement. This is one highlight of this question. This one and one more is there. Rest everything is manageable. Okay. But I'll tell you, this question, even if you don't know anything, still you can do 2-3 marks swaha. I'll tell you last mein how. If you don't know any bit of this, if you totally forget this also, now you should not forget, I've told. Okay, in case you forget also, 2-3 marks aram se you'll get. End mein I will tell you how to do that. That much you tell sir, enough sir. Hey, wait. This is okay na. Debtors got total is 564,094. This is the total debtors you will get. Next is some working note. Material cost. Sir, material cost, I've done a working note. Why? There is some import duty. There is some custom duty and duty drawback. We are yet to calculate that or already calculated? We already calculated that. So here only we have done 6 lakh plus 20% custom duty minus 5% duty drawback. When you did, how much did you get? 690. That's what I've arrived at over here. Okay. In fact, what is the material cost for local? Locally you purchase material for how much? 9 lakh. Import it is 6 lakh. 90,000. So that means what is the total material cost? 9 lakh for domestic. For import, cost was 6 lakh. Duty was 20%. Duty drawback was 5%. So net cost will become 690. Adding these two, you will get the total material cost to be 15 lakh. 90,000. We have to take this. Yes, sir, people. Yes, sir, people. Correct, people. Next is manufacturing overhead. Why manufacturing overhead? Depreciation. They told in the problem manufacturing overhead is 26 lakh 40,000, but this is inclusive of depreciation. In fact, we eliminated that also. In fact, depreciation is only adjustment or one more? Test your memory. What is one more? Subsidy. Perfect. That's what I've written here. Manufacturing overhead given is 26.4. From that, you have to reduce depreciation of 240. Subsidy of how much? 60,000. So net cost will become how much? 23 lakh 40,000. Since there are adjustment, I've presented this as a separate working note. That's all. Same 23.4. See, I've got it here also. Given number, depreciation reduce, revenue subsidy reduce. So net number is 23 lakh 40,000. Okay, G. And there is one hidden adjustment. That way, this is good problem. Okay, one hidden adjustment. What is that is? Sir, check the question. Check our solution. Sir, we did sales minus GP. What did we get? Cost of goods sold. Cost of goods sold. Or you can also call it as this one as cost of production. Many administrative expenses coming later on. Correct? I mean, this you can call it as COGS or you can call it as cost of production. As per our calculation, how much is it? Punch in your number, calculator. Take this number. How much? Or in fact, leave this number. What is the number we should get? 46,04,472. This is the required cost of production. Any problem? Any problem? No. Now let's see what is the data they've given in the question. Sir, what is a, tell me, how do you get cost of production? Cost of production, how do you get? Material consumed plus labor overheads plus manufacturing overheads. Correct? That's it. Anyway, existing company, so opening stock of WIP, closing stock of WIP will be same. Automatically, you will get cost of production. Okay. Now check material consumed. Take your calculator. How much is material consumed given? Can we take the value given or we have to consider duty drawback and all? After all that, what is the material cost? 15,90,000. This is material consumed. Next what? Labor cost. Labor cost, I think no adjustment was there. We'll take it from the question. What is the labor cost, sir? Payment labor cost is 6 lakh. Add 6 lakh, you add. Overheads, can I take 26 lakh 40,000 or adjustments? Reduce depreciation, reduce subsidy. You will get how much? 23 lakh 40,000. So number you have to take is 23 lakh 40,000. Add 23 lakh 40,000. What is it? 45 lakh 30,000. We are getting how much? 45 lakh 30,000. But we need how much? 46 lakh 472. That means we have only one overhead or we have some other overheads also. Other overheads calculated or arrived as a balancing figure. Hidden adjustment. Okay. So these took a difference. You find that is how much? 74,472. This particular domestic calculation and this overhead is a highlight of this question. Other than that, rest everything we can manage. Till here, all the numbers looks fine now. All the numbers looks good. Can we calculate working capital estimate? So what about WIP ka closing stock? You didn't prepare working note only. Directly I'll do it. Closing stock of raw material. Directly I'll do it. Why didn't you do it in previous problem? I wanted you to explain the format. Okay. Fine. How will we directly do it now? Take one by one. Now we'll go to the question only. I told no, if you don't know anything in the question, still you can do few marks. Swaha you can do. How? First one. Sir, you purchased materials domestically and domestically creditor gives you how many months credit? 2 months credit. That means directly you can find out creditors. What is the total purchases? Total domestic purchases how much? Take your calculator. Total domestic purchases how much? 9 lakh. 9 lakh is the value for 12 months. Does the creditor give you 12 months credit or 2 months credit? 2 months. Do it. 9 lakh into 12 by 2 how much? 1 lakh 50,000. That means the creditor ka value is, creditor ka value here is how much? 1 lakh 50,000. Okay, Ji. Now you tell me. Even if you don't know anything, this one easily you can calculate. Sir, there will be a step marking. There will be a step marking. Even if you don't get debtors value properly or other overheads properly, at least this and all easily you can calculate. No, lag, gigo and all is directly given. This portion completely you can calculate. That means in 10 marks, at least you will get 2 marks if you do this properly. That's what I'm trying. Even in trickiest and biggest question, 1 or 2 adjustments will be straightforward. Focus on that. You can score. You just need to read that data properly once. Okay. All right. Now next one. We have only domestic purchase or also even import. Import. How much import goods, sir? 6 lakh rupees. Sir, is it 6 lakh or 6 lakh 90? 6 lakh 90,000. Sir, this extra 90,000 you are paying to creditor or government? Government is your creditor. Government is your creditor. Sir, no, that means what? How much do you need to pay to your creditor? Extra 90,000 you have to pay to whom? Not to the normal creditor. You have to pay to the government. Are we calculating government here or creditors ka due amount? Creditors. I mean, should we take 690 or 6 lakh only? 6 lakh. How much credit you are getting? 3 months. So calculate. 6 lakh is for 12 months. For 3 months, how much? 1 lakh 50,000. So the credit with respect to creditors relating to import is 1 lakh 50,000. Directly done without any working note. Simple, no? Why to put working note? If it is simple, we'll do it directly. Okay, 2 or damar. Yes, no? Okay, next one. This and all aram se taka we can do. Lag means what, sir? Outstanding. How many months lag? 1 month. So what is the total wages cost? 6 lakh. Entire 6 lakh is outstanding or 1 month? So how do you calculate? 6 lakh into 1 by 12. 6 lakh into 1 by 12 is how much? 50,000. So 50,000 is your outstanding wages. Okay. Next, what is the next? Manufacturing overhead. Manufacturing overhead also there is a lag. How much lag? Half a month. But can I take 2640 or 2340? 2340. Okay, now this is actual cost. So we can't take 2640. Sir, this 2640 includes depreciation. depreciation and all, there is a lag. Lag means a delay in payment. Depreciation you will pay. No. And subsidy amount you have to adjust. So after adjusting, how much is your manufacturing overhead? 23,40,000. So overhead cost is 23,40,000. How much delay? This is total. This is for whole year. So it will be 23,40,000 into 0.5 divided by 12. Why 0.5? Lag is half a month. Half a month means 0.5. Calculate how much? 97,500. Over a but hidden adjustment. What? We have only manufacturing overhead or also other overheads. They said overhead delay. No. How much is the other overhead? We got it as balancing figure. 74. This also you calculate. How much is outstanding overhead? Calculate quickly. 74,472 is for 12 months. There is a delay of 0.5. How much is that? 3103. You can also make an assumption that other overheads are not paid. But since manufacturing overheads there is a delay, it's better to assume that in other overheads also there is a delay. ICI assumes like that. Better to assume in that way only. Fine now. This is done. Next. What is next? What else we have? Sales. So will your sales come in working capital statement or debtors will come? Debtors. Debtors now split into 1 or 2? 2. How much? Domestic export. I think they have shown domestic and export separately. If you want, you can combine and show. How much is this number? 345, 164 and 218. 930. Where is it? Debtors. Here. 345, 164, 218, 930. Manageable. Yes. Correct, no, sir. Same number. Okay, na. They're not trusting only. 345, 164 and 218, 930. Got it. Okay, debtors over. Next what? Next is what? Admin expense. Admin expense is paid in advance. Advance means current liability or current assets. Prepaid expense. So it should come under current assets. How much? Entire 3,60,000 you are paid in advance or 2 months? Calculate. How do you calculate? 3,60,000 is for 12 months. For 2 months, how much? 3,60,000 into 2 by 12. How much is that? 60,000 is the prepaid admin expense. 60,000 here. Okay, G. Next, G. What is the next one, G? Now you will go taka. We'll go. Lag in selling and distribution expense. How much lag? Total amount is 3 lakh, but the lag is only 1 month. So calculate how much it will be. 3 lakh into 1 by 12. So what is that? 25,000. So outstanding selling and distribution expense is 25,000. No, not this. Outstanding selling and distribution expense is 25,000. So we have captured. Next, what have they told? From this table, we have captured everything. Next, what and all is there? Check. Advance tax is 25,000. Advance tax is a current liability or current assets? Prepaid tax is what? Current liability or prepaid expenses are what? Asset. So income tax paid 25,000 under current assets. Given a. Okay, next one what, G? First we'll take the question. Next is what? This is over. Company keeps 1 month stock of raw material. Raw material stock is 1 month. Now you know the connection. Either they will give you the data in units or in months. Or whatever. Here it's given in units or date. Months, whatever. So how do you calculate stock of raw material? You know this. How do you calculate? You are a producer here. So raw material you will purchase or raw material consume? Consumes. How will you take? Annual cost of raw material consumed divided by 12. Do you maintain 12 month stock or 1 month stock? So do you know annual raw material consumed? Yeah. Here. How much is your raw material consumed? 15,90,000. 15,90,000. Yes, no, sir. Calculate. Quickly calculate. How much is closing stock? Here only if you want, you can calculate closing stock. 15,90,000 is for 12 months. For 1 month, how much is it? 1,32,500 is the closing stock of raw material. That's it, or even you have WIP also. In fact, maybe we'll also calculate this one. We'll go in order. After, so the company keeps 1 month stock of raw material and finished goods. Sir, finished goods you calculated based on cost of production. Cost of production. Do you know cost of production? Yes, we know. Of course. How much is cost of production? Here also we wrote 46 lakh 4,472. Yes. This is for 1 day or whole year? Whole year. Whole year ka stock you will maintain or 1 month ka? 1 month. Calculate. How much is the closing stock of finished goods? 46 lakh 4,472 into 1 divided by 12. How much is that? 3,83,706. That is your closing stock of finished goods. Only one more we need to find, which is your work in progress. I think they've given the data here for that. Where is the data? Here. The goods will remain in process for half a month. So WIP holding period is half a month. So maybe we can calculate WIP here. With 90% raw material introduced in the process. So that means what is this 90%? Degree of completion for raw material. So now let's calculate WIP. First we'll take raw material consume. How much is raw material consumed, sir? We already have it here somewhere. We wrote. How much is raw material consumed? 15 lakh 90,000. So how do you calculate? We'll take raw material consumed into WIP holding period, which is 0.5. This 15 lakh 90,000 is for 1 day or whole year? Divided by 12 into WIP holding period into DOC. What is DOC? 90%. Calculate. Huh? 59625. That's it. Or even labor cost. What is the labor cost given in the question? There is no adjustment in labor cost. So how much is that? 6 lakh. But 6 lakh is for whole year, meaning it's for 12 months. WIP holding period is 0.5. For conversion cost, DOC is not given. So we'll take it as what? 50%. So multiply 6 lakh divided by 12 into 0.5 into 50%. How much? 12,500. Okay. Then overhead cost. But only one overheads or two overheads? One is your manufacturing overheads and then is your other overheads. Both you need to calculate. What is the manufacturing overheads? You will take the one they have given or after adjustments? After adjustment, how much is manufacturing overheads? 23 lakh of 40,000. But this is for 12 months. This is for 12 months into WIP holding period 0.5 into DOC 50%. How much? 48,000. 48072. 48750. Then other overheads. What is other overheads? We got it as balancing figure. Other overheads we got it as balancing figure 74472. 74472. This is for whole year, meaning 12 months into WIP holding period, which is 0.5 into DOC, which is 50%. How much? 1552. This number you'll have to plug in the numbers. What is that? I don't know whether they have calculated separately or totally. I don't know. Or they have calculated separately. How much is the number we're getting? Remember? 59625, 12,500, 48,750 and 1552. 59625, 12,500, 48,750 and 1552. Same number. Okay. Anything? 1 minute. Okay. This is also over. Anything else is pending? Let's see. Company believes in keeping a cash balance of 150 and there is a safety margin of how much? 15%. So cash balance they only given in the question to be how much? 150. Everything I have ticked. This is your total current assets. Here also everything we have ticked. This is your total current liability. Current asset minus current liability will give you working capital you will get. But can we take that or we have to keep 15% safety margin? This calculation is wrong. You calculate this. 960 to 124 ka 15% you do. 960 to 124 ka 15% is how much? 134. 144,319. The number that they've written is wrong. Okay, it is not 987. This should have been 962. It's a typo. Okay, leave that. That means what is your net working capital? After adding safety margin, it is 11,06,443. This is the question on this particular drum. Okay, people. Everybody cool, people. Yes, sir. Asho. That's all. What else you're looking for? Okay, next question. 1 minute. I think one more is there. Let me review that question. 10th is a theory question, sir. You manage. There's nothing in that. Chapter 1 or chapter 2, they picked up. So this is your summary on RTP May 25. Thank you.